Now we'll start question and answer discussion of chapter number 9, which is miscellaneous standards. Here basically we'll be discussing question and answers of 4 standards. First, essay 299, essay 550, essay 600 and essay 610. Question and answers related to these standards we will be covering here in this particular chapter. And the weightage of this particular chapter is 5 to 6 marks you will get from these 4 standards. You will get 5 to 6 marks. Okay. Yes sir. Let us start with essay 299, joint audit of financial statements. Question number 1. KRP Limited at its annual general meeting appointed Mr. X, Mr. Y and Mr. Z as joint auditors to conduct auditing for financial year 2021. For the valuation of a gratuity scheme of the company, Mr. X, Mr. Y and Mr. Z wanted to refer their own known actuaries. Due to difference of opinion, all joint auditors consulted their own respective actuaries. Subsequently, major difference was found in actuary reports. However, Mr. X agreed to Mr. Y's actuary report. So Mr. X and Mr. Y, they agreed to one actuary report. Though Mr. Z did not, Mr. X contends that Mr. Y's actuary report shall be considered in audit report due to majority votes. Now Mr. Z is in dilemma. Mr. Z did not agree with actuary reports of Mr. X and Y. Mr. X is saying that, see Mr. Z, since majority of joint auditors are agreeing to one particular actuary report, you also should agree with this only. We should go with majority, like that he is saying. Is that correct? Answer is no. None of the joint auditor is bound by the views of majority of the joint auditors. Correct or not? This is the basic rule which you will find in essay 299. You are required to briefly explain the responsibilities of auditors when they are jointly and severally responsible in respect of audit conducted by them, and also guide Mr. Z in such situation. So you have to list down in which situations all the joint auditors are jointly responsible and in which situations joint auditors are separately responsible. First of all, for the work which is divided among the joint auditors, each joint auditor is individually responsible for the work that has been allocated to him, right? That is with respect to the individual responsibility of joint auditors. Whereas all the joint auditors jointly and severally responsible for the work which is not divided among themselves. Correct or not? Yes. So each joint auditor shall be responsible only for the work that has been allocated or divided to such joint auditor. All joint auditors jointly and severally responsible for the work that is not divided among the joint auditors, and also decisions taken by all the joint auditors under planning in respect of common audit areas. With respect to common audit areas also, all the joint auditors together are responsible, and matters which are brought to the notice of joint auditors by any one of them and on which there is an agreement among the joint auditors. So there are three joint auditors, X, Y, Z. Mr. X has been given the area of sales. While doing the audit of sales, he has got a particular doubt, particular scenario. He is confused with respect to that. So what he did, he brought this matter to the notice of Mr. Y and Mr. Z. All these joint auditors together, they discussed about this matter and they have reached to common conclusion. Now with respect to this matter also, all the joint auditors together they will be responsible, because all of them discussed about that matter and they have arrived at a conclusion. Getting it? Yes. And examining whether financial statements have been prepared as per the applicable financial reporting framework and in compliance with relevant statutes or not, that is also responsibility of all the joint auditors. and also examining whether audit report is in compliance with auditing standards and laws and regulation. That is also responsibility of all the joint auditors. Ensuring that audit report complies with requirement of relevant statute, presentation, disclosure of financial statements as per applicable financial reporting framework. These 3 points are very easy. First two are related to financial statements, last one is related to audit report. Remaining these three, they are somewhat similar, so easily you can remember all these 6 points, right? Yes. And you should also write this point wherein joint auditors are in disagreement with regard to any matters to be covered by audit report. Each one of them should express their own opinion through a separate audit report. Joint auditor is not bound by the views of majority of the joint auditors views. So if a particular joint auditor doesn't agree with the view of other joint auditors, then he can give a separate audit report. It is not necessary that all the joint auditors should mandatorily give a common audit report. No, individual joint auditor can give his own audit report if he is not agreeing with the views of other joint auditors. Got it? Yes. So the same thing you will explain here. Next, question number 2. Your firm is one of the joint auditors of FMP Limited. Under what circumstances joint auditors are jointly liable for the work in relation to audit of financial statements? This point we have seen already in the previous question itself. The six circumstances in which all the joint auditors will be jointly liable. And is there any restriction on joint auditor to communicate a dissenting note differing from the majority opinion of the other joint auditors in the audit report issued under section 143 of the Companies Act 2013? So if joint auditors, they give their own audit reports, separate audit reports, let's say Mr. X, Mr. Y, both of them has given separate audit reports. Mr. X has given his own audit report, Mr. Y has given his own audit report. In this situation, is there any responsibility on these joint auditors? That is the question that they are asking. Here Mr. X, in his audit report, under other matter paragraph, he need to mention that there is another joint auditor, Mr. Y. He has given separate audit report. You please go and read that audit report also. Like that, you need to mention in the other matter paragraph. Similarly, Mr. Y also will mention in his audit report under other matter paragraph that, see users, there is another joint auditor, Mr. X. He has not agreed with my opinion, so he has given another audit report. You please go and read that audit report also. Like that, you will mention in the other matter paragraph of each of the joint auditors a separate report. Got it? Yes. So the same thing you will write. Restriction as to communication of dissenting note. So other matter paragraph, joint auditor is not bound by the views of majority of the joint auditors. So under other matter paragraph, you need to mention the note. Next, question number 3. 4 audit firms, that is GRP and Co, MKS and Co, CY and Associates, DES and Associates, 4 audit firms have been appointed for conducting statutory audit of KNB Bank, a public sector bank, in accordance with the regulatory guidelines. The professional work was divided by audit firms on the basis of zones of the bank. However, work relating to IT systems and control was not allocated by them due to its very nature. So they have decided that all the joint auditors will audit this IT systems and controls. So that is common audit area. While planning for the above common work area, it was decided to test IT general controls, application controls, and IT dependent manual controls. Okay. Planned key audit procedures relating to this common area also included testing, design, and operating effectiveness of controls over computer operations, including backup, batch processing, and data center security. Basically, they are saying testing of IT systems and controls include performing all these procedures on all these items. Okay, that is irrelevant basically. Now the actual question starts here. The actual audit procedures pertaining to testing controls over batch processing were performed by team of DES and Associates. So it is planned that all the joint auditors have to perform their own audit procedures on the area of IT systems. but only one joint auditor, DES and associates, performed testing of controls over batch processing. In case work in relation to above audit procedure is not performed professionally by DES and associates. See, DES and associates, you need to observe. First of all the joint auditors planned that all of us will verify that particular area, but actual audit procedures have been performed only by DES and associates chartered accountants. Now, it was identified that audit procedure is not performed professionally by DES and associates. Discuss where responsibility for such lapses would lie in line with SA 299. You need to observe what question is asking. Question is saying that audit procedures are not performed professionally by DES associates. They are not saying that there are some misstatements unidentified in the area of IT systems and computer systems. No, they are saying DES and associates has not professionally performed the work. If DES and associates has not professionally performed their work, only DES and associates will be responsible for their work. Correct or not? Understanding, if DES and associates does not perform their work professionally, how will you make other joint auditors liable for the work of DES? See, you can say that, sir, that area is responsibility of all joint auditors. Yes, that area is responsibility of all joint auditors, but if question says that in that area some misstatements are found and those misstatements were not identified by joint auditors, in such a situation all the joint auditors will be responsible. But the question is not saying that there are misstatements in that area. Question is saying that DES and associates has not performed its work professionally. If it has not performed its work professionally, only DES and co will be liable for that. Understanding? Yes. So here you will say that in the instant case, audit procedure relating to testing, design and operating effectiveness of controls or computer operation, including backup, all these things is jointly planned and is a common area. But audit procedure relating to testing, control or batch processing were actually performed by DES and associates. These were planned jointly. In case of any lapses in performing such procedures, DES and associates alone would be responsible. Got it? But if there are any misstatements in that area and those misstatements are unidentified, then all the joint auditors will be responsible. Got it? Yes. Next, question number 4. DICE Limited appointed 2 CA firms, Yemen and Associates and PQ and Co as joint auditors for conducting audit for the year ended 31st March 2023. In the course of audit, it has been observed that there is a major understatement in the value of inventory. The inventory valuation work was looked after by Yemen and Associates, but there was no documentation for the division of the work between the joint auditors. So they have divided the work, but they have not entered into a document of division of work and they have not signed any of the document. In such a situation, comment on the above situation with regard to responsibilities among joint auditors. First of all, is it mandatory to enter into a document of division of work? Is it mandatory to write a document of division of work and sign that document? The answer is yes, it is mandatory to have document of division of work. If there is no document of division of work signed by the joint auditors, then even though there is a division of work orally, even though they have orally divided the work among themselves, all the joint auditors together will be responsible for that work because there is no document which is signed by the joint auditors stating division of work. Getting it? The same thing you need to mention. So after identification and allocation of work among joint auditors, work allocation document shall be signed by all the joint auditors. In respect of audit work, divided among joint auditors, each joint auditor is responsible only for the work allocated to him, whether or not he has prepared a separate report on the work performed by him. However, for the work not divided, all the joint auditors are jointly and severally responsible. In the present case, though the revenue aspects were looked after by MN and associates, but there is no document for a division of the work between them. Both the joint auditors will be held responsible for it. And conclusion, both the auditors are jointly, severally responsible for that work, even though it has been divided. Why? Since there is no work allocation document signed by the joint auditors. Got it? Yeah. Next, question number 5. A, B, and C are joint auditors of a company. B is of the opinion that there are material misstatements in the financial statements of company, which if accounted for would turn profit reflected in financial statements for 25 crore to a loss of 5 crore. He therefore wants to give adverse opinion to be expressed on the in the audit report. So Mr. B wanted to give adverse opinion. However, A and B do not C, Mr. C, right? B wanted to give adverse opinion. However, A and B do not concur with his views. Here you can make it as C. C is of opinion that he wanted to give adverse opinion, whereas A and B do not concur with his views and are inclined to accept management's version. Is C required to go by majority opinion of two joint auditors? Tell me. Here A, B, C are joint auditors. C wanted to give adverse opinion. A and B wanted to give normal unmodified opinion. Now, should C agree with majority of joint auditors? The answer is no. Can C give separate audit report? Yes, he can give separate audit report. Can A and B together give separate audit report? Yes, they can give separate audit report. Now, in the C's audit report, should there be other matter paragraph explaining about audit report given by A and B? Yes. Similarly, in the audit report of A and B also, there should be other matter paragraph explaining the audit report given by Mr. C. All these points you need to write down. Got it? Yeah. Next, as per SA 299, joint audit of financial statements, joint audit basically implies pooling together the resources and expertise of more than one firm of auditors to render an expert job in a given time period, which may be difficult to accomplish acting individually. Explain by stating any 5 advantages of joint audit. So, what are the advantages of joint audit? There are many advantages. First of all, expertise will be shared among the joint auditors, right? If there is any doubt for any one of the joint auditor, he can consultation is possible, correct? He can consult the other joint auditors. Next, quality of work will increase, work burden will reduce, correct or not? Next, training cost will reduce, because the training for all the staff of joint auditors can be given together, correct or not? So all these advantages, so sharing of expertise, mutual consultation, lower workload, better quality, improved service. In respect of multinational companies, work can be spread using expertise of local firms, lower staff development cost, and lower cost to carry out the work. All those are the advantages of joint audit. Next, question number 7. PQR and Associates and MNO and Co. Both firms of chartered accountants have been appointed as joint auditors of Gamma and Beta Limited. Before the commencement of audit, joint auditors should discuss and develop a joint audit plan. In developing joint audit plan, the joint auditors should identify division of audit areas and common audit areas. Explain stating the other relevant consideration in this regard with reference to standards on auditing. So, while the question what they're asking is, while planning for the joint audit, what are the points that should be considered by the joint auditors in preparation of joint audit plan? See, almost same points as we have discussed in SA 300 planning, same points you will find here also. Since it is a joint audit, the first point that should be considered is which areas should be allocated among joint auditors, which areas should be commonly audited by all the joint auditors. That is the first point that should be considered. Next point that should be considered is, are there any areas in the entity on which the focus of audit team should be directed, the efforts of the audit team should be directed. joint auditors needs to consider this while planning the joint audit. Next, what are the reporting objectives for this engagement, that also should be considered. Next, nature, timing, extent of resources that are required for performing the audit, even that has to be considered. And knowledge that has been gained in the previous audit engagements should also be considered while developing audit plan for the current period audit. So if you see all these 4 points, these are repeated in SA 300 also. Only first point is new point here, because planning, whether you are planning for joint audit or normal audit, the planning will be same. There will not be any change in the planning. Got it? Yes. So those are question and answers of SA 299. Now moving to question and answers of SA 550, related parties. There will be just two questions in this standard. Question number 1. Auditor has a responsibility to perform audit procedures to identify, assess and respond to risk of material misstatement arising from entities' failure to appropriately account for related party relationships, transactions or balances. During the audit, auditor should maintain alertness for related party information while reviewing records and documents. He may inspect the records or documents that may provide information about related party relationships and transactions. Explain in detail with examples. So they are asking, in order to identify related party relationships and transactions, what documents auditor can verify. Some examples of documents: he will verify income tax returns, various returns filed with other regulatory authorities. He will verify minutes books. He will verify various contracts entered with directors. He will verify other contracts and agreements entered by the company. He will verify insurance policies taken by the company. Like this, many documents you can write. See, income tax returns, information supplied by entity to other regulatory authorities, shareholders register, record of entities investments and those of its pension plans, contracts and agreements with key management, significant contracts and agreements, specific invoices, life insurance policies, significant contracts renegotiated, internal audit reports, because in internal audit report might be internal auditor might have identified some of the related party transactions and relationships. You will get to know them by reading the internal auditor's report. And the documents associated with entities filing with security regulator. If you observe 3 points, point 1, point 2 and point 12, all these 3 points are related to filings with regulators, right? Yeah. Next, moving to question number 2. Bell Manufacturing Limited has undergone a restructuring during the current year, resulting in changes in key personnel and ownership interests. The auditor observes that several new parties have become related to the entity due to these changes. During the audit, auditor also notices a few transactions that appear unusual and possibly outside the normal course of business. Management states that all related party relationships and transactions have been properly identified and recorded. He explained with reference to SA 550 inquiries auditor should make of management and the additional audit procedures to be performed in relation to related parties. First of all, what inquiries auditor will make with management? Auditor will ask the management to give list of the identity of entities related parties. So who are all the entities related parties? Give me the list. Like that, list of identity of entities related parties, he will ask. After that, auditor will also inquire with the management about what relationship entity is having with that related party. So nature of relationship. After that, what transaction entity has entered with that related party. So whether entity has entered into any transaction with those related parties. So these are the inquiries that you will make with the management with respect to the related parties. After that, they are asking additional audit procedures to be performed in relation to related parties and related party transactions in this situation. See, auditor, he will inquire management and others within the entity and perform other risk assessment procedures in order to obtain understanding about the internal controls that have been established in the entity for the purpose of identifying and accounting and properly disclosing the related party relations and transactions in the entity. So auditor will understand the internal controls that entity has established for the purpose of identifying, accounting and disclosing the related party relationships and transaction, and he will also understand those internal controls that have been established for the purpose of authorization and approval of significant related parties transactions. So controls over these two things auditor will understand by performing additional audit procedures. Got it? Yes, these are the additional audit procedures that the auditor will perform with respect to related parties, and only these two are the questions from this essay 550. Next, moving to question and answers of essay 600 using the work of other auditor. Basically, there will be only two questions in this particular standard also. Question number 1. Mr. L is a principal auditor of OP Limited. There are several divisions of OP Limited that are audited by other auditors. State the procedures Mr. L should ordinarily perform to obtain sufficient and appropriate audit evidence that work of other auditors is adequate for the principal auditor's purpose in the context of this assignment. So they are asking what audit procedures principal auditor has to perform in order to decide whether the work of other auditor is adequate for his purpose or not. Nothing but how they should coordinate. First of all, principal auditor, he should communicate with other auditor and tell to the other auditor that, see other auditor, the work that you are doing, I will be using your work once you do that work. Like that, you have to coordinate with the other auditor. So when using work of another auditor, principal auditor should ordinarily perform the following: advise the other auditor of the use that is to be made of the other auditor's work and make sufficient arrangements for coordination of their efforts. And principal auditor should also inform the other auditor. In the given question, other auditor is doing audit of certain divisions, right? In those divisions, if there is any significant areas that principal auditor wanted the other auditor to focus, then principal auditor can tell to the other auditor that, see other auditor, these are important areas, you please focus on them more. So matters requiring special consideration can be communicated by principal auditor to other auditor. And also principal auditor can communicate the other auditor the timetable within which the work of other auditor has to be completed. So timetable for completion of the work. Next, if at all there are any intercomponent transactions that has taken place, those intercomponent transactions will be eliminated at the consolidation level. Now principal auditor can ask the other auditor to identify intercomponent transactions that has taken place in his subsidiary or in his division, so that it becomes easy for the principal auditor to eliminate those intercomponent transactions. So procedure for identification of intercomponent transactions. And principal auditor can also advise other auditor of the significant accounting, auditing and reporting requirements and obtain representation as to compliance with them. And principal auditor might discuss with other auditor the audit procedures applied or review a written summary of other audit procedures. Now other auditor has performed certain audit procedures for doing audit of that particular division. Principal auditor can discuss with the other auditor, what procedures have you performed, like that you can discuss with the other auditor. And you can also ask the other auditor to fill questionnaire or checklist. You can send a checklist to the other auditor or the questionnaire to other auditor, and you can ask the other auditor to fill that checklist or to fill that questionnaire. And in some situations, if principal auditor wants, he himself also can visit the location of a component and verify. So principal auditor may also wish to visit the other auditor. Next, question number 2. Question number 2 same as that of question number 1. So with respect to coordination and proper understanding between principal auditor, same aspects as we have seen: advise other auditor of use of his work, special consideration, identification of intercomponent transaction, timetable. And with respect to procedures, also same: discuss with the other auditor, review written summary, and principal auditor may also wish to visit the other auditor. All the same points that we have discussed in first question. Second question also same question only. Got it? Yes. So by this, question and answers of essay 600 are also completed. Now we'll see question and answers of essay 610. Essay 610 is about using the work of internal auditor, right? So question number 1. Mrs. PSR and Associates are the auditors of Saturn Hotel, a chain of 5-star hotels. Since the nature of their business is prone to frauds, the company has appointed internal auditors at various locations. The company has also devised a system of effective and efficient internal controls. The auditors, Mrs. PSR and Associates, want to use the work of internal auditors in order to ensure effectiveness. What kind of coordination should be there between external auditor and the internal audit function? So they are saying, what type of coordination should be there between external auditor and internal auditor? First of all, there should be proper discussions that should take place between external auditor and internal auditor at regular intervals. So there should be discussions that should take place at appropriate intervals. And external auditor should also tell the internal auditor about significant matters that may affect the function of internal audit. So external auditor has to inform the internal auditor that in this company there are these significant matters that will impact the internal audit function, and external auditor is advised of and has access to relevant reports of internal audit function and is informed about any significant matters that come to the attention of internal audit function. So external auditor should have access to the reports of internal auditor, and if internal auditor has found any findings in the audit, those findings should be brought to the notice of external auditor also. These are just some of the examples of situations how the proper coordination should be there between external auditor and internal auditor. If these things are there, it can be said that yes, there is proper coordination between internal auditor and external auditor. Next, question number 2. PQR and Company Chartered Accountants has been appointed as a statutory auditor of MGM Limited. The financial statements of company have material amount outstanding as debtors. Aging of debtors is being done by internal auditors and is given by them in their monthly report. So internal auditors are doing aging of debtors. This issue was also discussed with management. The engagement partner from PQR and Co decided to give age-wise debtors as per the report of internal auditor due to shortage of time. Now, external auditor, he has decided to give the disclosure in the financial statements about the age of debtors as per the work done by internal auditor only. Since time available was very less, external auditor did not perform any aging schedule of debtors. He has used the same aging schedule that was prepared by internal auditors. After the audit report was released, the engagement partner realized that disclosure of debtors is misleading and the aging was not done by the internal auditor on correct principles, due to which provision made against the old debtors was wrong. So after issuing the audit report, external auditor realized that this internal auditor has not done this aging of debtors properly. So the external auditor has given wrong debtors aging in the financial statements, and the provision that has been calculated based on aging of debtors is also arrived wrongly. Now the engagement partner held the internal auditor responsible for this. Now, can external auditor say that, can he say that this aging of debtors is done by internal auditor and he has done work wrongly and I has used his work, so I am not responsible, internal auditor only responsible for this wrong provision? Can external auditor say like that? No. Who told you to use the work of internal auditor? Did anyone tell the external auditor to use the work of internal auditor? External auditor only used, correct or not? So while deciding to use the work of internal auditor, it is the responsibility of external auditor to verify properly, to review that work. Without reviewing, you have used, so you only will be responsible for your opinion. You cannot push the responsibility onto internal auditor. Getting it? Yes. Is he correct in making statement that internal auditor is responsible for false provision, false provisioning? The answer is no. External auditor is not correct in stating that internal auditor is responsible for that false provision. External auditor, he himself will be responsible for that false provision. What considerations PQR and Co should have undertaken before relying on the work of the internal auditor? So you have to say that the statement said by external auditor is wrong. External auditor, he himself is responsible for the opinion. He cannot place responsibility on internal auditor. And while deciding to use the work of internal auditor, what aspects should be considered? First of all, external auditor has to check whether the work of internal auditor can be used by him, and whether the work of internal auditor is adequate for the purposes of external auditor or not. Next, external auditor should also check the level of competence, knowledge of the internal auditor, how much knowledgeable the internal auditor is. See whether work of internal audit function can be used and is it adequate. And the work of internal auditor, when you decide to use, you have to review that work once. If you are decided to use direct assistance, then under your direction, under your supervision, the internal auditor should work. So direct to supervise and review their work. Next, external auditor should also check organizational status of the internal auditor and level of competence of internal audit function, and whether internal auditor has discharged his work in a systematic manner or not. That means whether proper documentation maintained, whether the internal audit has been properly planned, whether internal auditor followed standards on internal audit. All these things you will see doing. See whether internal audit function applies. Systematic and disciplined approach means that only. Systematic and disciplined approach means whether standards of internal audit have been applied, whether proper documentation is maintained, whether internal audit has been properly planned. Checking all these things come under systematic and disciplined approach. Next, question number 3. CSD is appointed as statutory auditor of Beta Private Limited for the year 23-24. There exists an internal audit function in the company headed by its chief internal auditor. CAK valuation of trade receivables of company is assessed as area of higher risk by statutory auditor. It seems valuation of trade receivables involves higher risk of material misstatement. Okay. Now the statutory auditor wants to take direct assistance of chief internal auditor in respect of above matter. Discuss along with reasons whether it would be proper for the statutory auditor to assign checking accuracy of aging of trade receivables to chief internal auditor. See, first of all, when external auditor wanted to use the work of internal auditor either as a direct assistance or directly using his work, if the area involves higher risk of material misstatement and performing the work involves exercising of professional judgment, okay, more than a limited level of professional judgment has to be exercised for the purpose of doing the work. If these two things are there, external auditor should not use the work of internal auditor. Understanding? Let's say for example, there is this particular area, okay, in this area Romum is high, plus for performing the work in this area more than limited judgment has to be exercised. If these two situations are there, external auditor should not assign the work to the internal auditor. Getting it? Yes. Now let us see. So external auditor wants to assign checking of accuracy of aging of trade receivables to internal auditor. Can he assign? First of all, they are saying in the area of trade receivables, higher ROMM is there. Okay, higher ROMM is there. Now, for checking accuracy of aging of trade receivable, does exercise of judgment required? See, aging of debtor means what? For how many days debtor is outstanding? 0 to 30 days, 30 to 60 days, 61 to 90 days. Checking that. Now, does checking that involves any judgment to be exercised? No. That is a fact on which date sale has been made and what is the due date for payment. From that due date till this date, how many days is there? That is completely a fact, correct or not? Calculating the age of debtor does not involve any exercise of judgment. It is not a subjective matter, it is a matter that is based on facts. So this area doesn't involve exercise of judgment, so this work can be assigned to the internal auditor. Getting it? Yes. Why this can be assigned? Because ROMM is more in this area, but judgment is not required for doing this work. Getting it? Yes. Next area, assign evaluation of adequacy of provision based on aging of trade receivable to chief internal auditor. Now, provision for doubtful debts. Now, how much provision you will provide for doubtful debts? How much percentage of provision you will provide? The percentage of provision that you provide depends on the age of debtor. If the debtor is outstanding for 30 days, provision will be less. Some 5%, 10% you will provide. If the debtor is outstanding for more than 90 days, provision will be more. Some 50%, 60% you will provide. So based on age of the debtor, provision will vary. Now, how much provision has to be kept based on the age of the debtor? That does that determination of provision percentage, does that require exercise of judgment? Yes, that requires the exercise of judgment. So whether limited judgment involved or more than limited judgment involved, high level of judgment is involved for determining that provision percentage amount. So this area should not be assigned to the internal auditor because it has more ROMM and also more than limited judgment is involved for doing that work. So the second area cannot be assigned to the internal auditors. The statutory auditor, he himself has to perform this. Got it? Yes, sir. So the same thing you will say. An area should not be assigned if the ROMM is high and judgment involved is more than limited. For the first situation, judgment involved is limited only, so it can be assigned. So auditor can assign. Whereas for the second situation, more than limited judgment is involved, so it is not appropriate to assign. Got it? Yes, sir. By this, question and answers of essay 610 got completed, and also question and answers of this particular ninth chapter miscellaneous standards also gets completed. Let me open next chapter. Now moving to question and answer discussion of chapter number 10, which is quality, audit quality. Basically, in this chapter we will be seeing SQC1 and essay 220. You can expect 3 to 4 marks from this particular chapter. Starting with question number 1. SQC1 requires assumption of leadership responsibilities for quality within the firm, or such leadership responsibilities required for audit engagements only. First of all, Who will take leadership responsibility for quality within the firm? Managing partner or CEO of the firm will take the responsibility. That is the answer to first question. Answer to this is second question. Next, they are asking, are such leadership responsibilities required for audit engagements only? At the firm level, whatever the engagements that the firm accepts, whether it might be audit, whether it might be review, whether it might be assurance engagement, whether it might be related service, for all the engagements that the firm accepts, this responsibility for quality lies with the managing partner. You need to write down that. Next, who assumes such leadership responsibilities within the firm? Of course, managing partner or CEO of the audit firm. And how it is important for audit quality? Why assigning leadership responsibility to managing partner or CEO is helpful for increasing quality of the audit? Because the example set by firm's leadership encourages inner culture that recognizes high quality audit work. So if topmost leadership, that is managing partner, CEO, if these people emphasizes more on the quality, of course if you give responsibility to them for ensuring the quality, they will emphasize on quality. If they emphasize more on the quality, if the top level people itself are like that, the entire culture of the organization builds upon that only. Correct or not? Yes. So that is the significance of assigning leadership responsibility with respect to quality to any of the person within the organization. Got it? Yes. See, this SQC1 and SA220, this will be from the point of view of audit firm. Understanding, all the auditing standards that we have seen, they are from the point of view of the client. Okay, in the client's organization, auditor has to perform these procedures, they have to maintain these controls, all that from the point of view of a client. But SQC1, SA220 are from the point of view of auditor. In the audit firm, what policies should be established, who has to take responsibility for the quality, all in the audit firm we will be discussing in SQC1 and SA220. Got it? Yes. Next, question number 2. CAM is engagement partner of firm Mrs. Y2Z LLP, and he is auditing the financial statements of listed entity ABC Limited. So client is a listed entity. The audit firm has determined that an engagement quality control review is required for this engagement. Discuss the responsibilities of CAM as an engagement partner for engagement quality control review as per SA 220. So if you remember, engagement quality control review, EQCR, is mandatory for listed entity audits. Correct? Now with respect to EQCR, what are the responsibilities of engagement partner? Engagement partner has to ensure that engagement quality control reviewer has been appointed for his audit, and engagement partner should not sign his audit report until and unless engagement quality control review has been completed. And whatever the significant findings, significant matters that engagement partner noticed during the audit, he needs to discuss them with the engagement quality control reviewer. These three are the responsibilities of engagement partner with respect to engagement quality control review. See, determine that EQC reviewer has been appointed, and engagement partner should not date auditor's report until the completion of engagement quality control review, and discuss significant matters arised during the audit with engagement quality control reviewer. Got it? So these are the responsibilities of engagement partner with respect to engagement quality control review. Next, they have also given about differences of opinion. In the question, they haven't asked about how to deal with differences of opinion between engagement partner and engagement quality control reviewer. So you need not write this particular point. Even if you don't write this point, you will get marks. Got it? Yes. Next, question number 3. Sigma Limited has approached CJK and Associates to appoint them as their auditor for a period of 5 years. in accordance with provisions of Companies Act 2013. The prospective client company is new to audit firm. SQC1 requires that firm before accepting engagement should inquire vital information about the client which helps the firm to decide about integrity of the client. Now, apart from integrity, obtaining such vital information about the client is helpful to the audit firm in deciding about which other matters. So, before accepting a new client or a new engagement, you need to obtain certain information from the client which will be helpful to you in understanding three things. What are those three things they are asking? First one, you need to check the integrity of the client which is given in the question itself. Next, you need to check whether your audit staff, whether the staff that you are having in the audit firm, are they competent enough to discharge this engagement. Now the client is offering you a particular engagement. If you accept that engagement, you should have knowledgeable resources, knowledgeable people to discharge that engagement, correct or not? So you have to check whether you are having proper knowledgeable people to perform the engagement or not. Next, the third one is, if you accept this engagement, will you be able to comply with the ethical requirements including independence while conducting the engagement? These three things you have to check. So you have to obtain such information which will be helpful to you in deciding these three things. That is the answer for first question. Next, which matters would be considered by audit firm with regard to integrity of the client? So in order to understand whether client is having utmost integrity or not, what matters you have to check. So you have to see what is the nature of operations of the client and which business he doing. Because if the business that he is doing itself is illegal business, for sure the client will not be having integrity. So you have to understand the nature of business of the client, is it legal, and the type of operations that he is involved in. Next, you have to check whether there are any pending cases against the client, whether there are cases as per money laundering. Is client involved in any money laundering activities? That you have to check, because if the client is involved in any cases money laundering activities, you will get a doubt about his integrity, right? Next, you should also check attitude of a client towards establishment of internal controls, towards compliance with accounting standards. So is client showing interest in all these things or not? You need to check that. Getting it? Next, you should also see whether client is trying to keep the audit fee as lower as possible. So all these are certain situations. So client's operation, client's attitude towards compliance with accounting standards and internal control, whether client is aggressively concerned with maintaining the firm fee as low as possible, indications of inappropriate limitation on scope of work, whether client is trying to put any limitation on the scope of work, and indication that client might be involved in any money laundering activities. And client is appointing you in the current year, that means in the previous years some other auditors would have done the audit, right? Now what is the reason why client is removing those previous auditors and appointing you as a auditor? You should also ask that reasons for the proposed appointment of the firm and non-reappointment of the previous firm. So these are certain aspects that you will check in deciding whether client is having utmost integrity or not. Next, question number 4. Messrs. ABC and Co. Chartered Accountants have been appointed as statutory auditors of DEF Limited, which is a listed company, for the financial year 24-25. CAX, a seasoned chartered accountant with over 15 years of experience, has been assigned as the engagement partner for this audit. CAX takes responsibility for maintaining overall quality on this audit engagement in accordance with SA 220. What do the actions of engagement partner and appropriate messages to the other members of the engagement team in taking responsibility for overall quality on engagement emphasize? See, nothing but you already know that it is the managing partner who has to take responsibility for leadership at the firm level. Similarly, at the audit engagement level, engagement partner has to take responsibility for maintaining quality in that audit engagement. Getting it? Now, by taking that leadership responsibility for quality at the audit engagement level, on what aspects the engagement partner has to emphasize upon, the engagement partner has to emphasize to his engagement team that they should perform the work as per professional, legal and regulatory requirements, because only if they do their work as per professional, legal and regulatory requirements, the quality of the audit work will be improved. Next, engagement partner should also emphasize his engagement team to comply with quality control requirements of the firm's policies. Understanding? So perform work as per PLR requirements. PLR means nothing but professional, legal, regulatory requirements. Comply with firms' quality control policies. And engagement partner should also emphasize on issuing the audit reports that are appropriate in the circumstances. Of course, if you follow with point A and B, the audit reports that you issue will be appropriate for the circumstances. And engagement team's ability to raise concerns without fear of reprisal. So you should encourage your engagement team members to bring any points that they have noticed during the audit to the notice of engagement partner for the discussion. Understanding? And the fact that quality is essential in performing the audit, he should always, the leader, nothing but the engagement partner, has to always emphasize on giving utmost importance to the quality. He needs to emphasize this to the engagement team. He should tell the engagement team that, see, engagement team, while performing the audit, you have to give utmost importance to the quality. So these are the points on which he has to emphasize by taking responsibility for engagement quality control. Got it? Yes. Next, question number 5. SQC1 dwells upon engagement quality control review as part of system of quality control in a firm. Why is such a review required? So, why engagement quality control review is required? Because auditor, he will perform his work and he will give his audit report. Before giving his audit report, whatever the work that the auditor has performed, whatever the judgments, whatever the conclusions that the auditor has reached, it is better if some other chartered accountant reviews those judgments, so that the audit report that the auditor issues will be objective, will be correct audit report, appropriate in the circumstances, and the quality of the audit also increases if the work has been once reviewed by another chartered accountant. So that is the purpose of engagement quality control review. Next, for which type of engagements EQCR is mandatory? You already know this. Only for the listed entities, engagement quality control review is mandatory. Now, what should be approach of firm for engagements for which EQCR is not mandatory? So, for listed entities, EQCR is mandatory, you will conduct the EQCR, that is fine. What about the engagements or the entities for which EQCR is not mandatory, for unlisted companies? In those situations, firms' policies should design certain aspects, certain criteria in order to conduct EQCR. If it is a listed, mandatorily you will conduct the EQCR. If it is unlisted, then firm's system of quality control should contain policies and procedures and certain criteria wherein you can decide that if this criteria is met, you will appoint EQC reviewer for unlisted companies also. Getting it? Yes. So in respect of other engagements, firm should devise criteria to determine cases requiring performance of engagement quality control review. Got it? Yes, sir. Next, question number 6. CAN, statutory auditor of QST Limited, appointed for a term of 5 years, has completed audit for the first financial year ending 31st March 2024. In compliance with requirements of professional standards, an audit file has been assembled. After about a period of 6 months from the date of issue of audit report, he gets a call from CFO of the company to share a complete audit file so that financial reporting of company can be improved upon in coming periods. Is it mandatory for statutory auditor to share audit files with the client? First of all, as per SQC1, audit documentation is the property of a engagement partner auditor. So it is not a mandatory for auditor to share his audit documentation, audit file with the client. However, if auditor wants, at his discretion, he can make copies of those documents made available to the client. Got it? Yes. What are the requirements for making audit documentation available to the client? It is completely at the discretion of the auditor. If he wants, he can make those documents available to the client, but there is no mandatory requirement. Got it? So it is not mandatory for CAN to share audit file. He may at his discretion make portions or extracts of documentation made available to the client. Got it? Yes, sir. Next, question number 7. Messrs. KS, JS and Associates are the statutory auditors of Moon Limited for the financial year 23-24. During an audit briefing, CS Sanket, the engagement partner, explained that auditor must assemble audit documentation in an audit file and complete the administrative process of finalizing the audit file on a timely basis after the date of auditor's report. He also highlighted the requirement of SQC1 regarding establishment of policies and procedures for retention of engagement documentation in a firm. Already we have seen these type of questions in essay 230, right? Now explain the requirements related to timely assembly and retention of audit file. Nothing but they are asking within how many days you have to complete the audit file, the documentation of audit file. Within 60 days from the end of date of auditor's report, you have to complete audit file, assembly of the audit file. And once audit file has been assembled, for how many years you have to keep that documentation, for how many years you have to retain that documentation with you. For 7 years from the date of audit report, you have to retain that documentation. Retention period is 7 years. Both of these are prescribed by SQC1. So both points you need to write in accordance with relevant engagement quality control standards. So you will say that 60 days. This entire second point is about that 60 days. And fourth point, and fifth point, this says that you have to maintain those audit documentation for at least 7 years from the date of auditor's report. And third point, it is not necessary. Question has not asked about third point, but if you want, you can write third point also. This third point says in which situations or what changes to the audit documentation will be treated as administrative changes, because administrative changes can be made during the assembly process, right? So deleting or superseding the draft versions of documents can be done. Next, sorting, cross referencing can be done. That will also be treated as administrative change. Next, after that, signing off completion checklist can also be done, and documenting audit evidence that auditor has obtained during the audit only and discussed that evidence with all other audit team members. He can keep that document in the audit file now. All these will be treated as administrative changes. Got it? Yes, sir. Next, question number 8. SRT and Co Chartered Accountants are the statutory auditors of D Infra Projects Limited, a listed company engaged in large infrastructure contracts. During the audit for the year ended 31st March 2025, engagement partner, just a second. Yes. During the audit for the year ended 31st March 2025, engagement partner Mr. A came to know of the following matters. Spouse of one of the senior members of engagement team holds substantial equity shares in D infra projects. This creates self interest threat. Correct? Yes. The firm has recently provided consultancy services relating to internal financial control implementation to the same client. This creates self review threat. Yes. A partner of the firm has been offered a position on the advisory board of the group company of D infra projects. So all these situations create certain threats to independence, right? Yes. Now, Mr. A believes that certain situations may create threats to independence. However, due to significance of a client, some partners of the firm are reluctant to consider withdrawal. As per SA 220, quality control for audit of financial statements discuss the responsibilities of engagement partner in relation to ethical requirements in the above circumstances. So, what is the responsibility of engagement partner in the above circumstances? First of all, engagement partner, he needs to identify in this audit whether there are any threats to independence. So the first responsibility is that only identify threat to independence regarding the audit engagement that safeguards may not be able to eliminate. So you have to identify any threats in the audit engagement because of which you might not be able to act independently. That is one of your responsibility. And after identifying threats, you have to check whether these threats can be completely eliminated. If they can't be completely eliminated, by implementing safeguards, can I bring those threats to acceptably low level? If I can't bring them to acceptably low level, the option available is just to withdraw from the engagement, correct or not? So like this, you need to identify the threats to independence which cannot be eliminated even after implementing the safeguards. You have to link this to the present situation. So in the present case, financial interest held by spouse, provision for consultancy, the provision of consultancy services, all these things, they will create threats to independence, right? Next, once you have identified threats to independence, you have to report the same, reporting by engagement partner to relevant persons within the firm to determine appropriate action, which may include eliminating the activity or interest that creates a threat or withdrawing from the audit engagement. So once you have identified these threats, the next step is you have to bring them to the notice of the managing partner of the audit firm and suggest what has to be taken, what action has to be taken in the given situation. So here in this first situation, what you can do is you can suggest to sell off these shares which are being held by spouse of senior member. Next, in the second situation, you can suggest stop providing these services from now onwards. And in the third situation, you can suggest the partner of the firm to avoid taking such a position in advisory board. You can ask the partner of firm to please resign from that position. So by taking those actions, you can eliminate the threat, correct or not? So those things you need to suggest in your answer: disposal of interest, removal of affected personnel, discontinuation of conflicting services, or withdrawal from the audit engagement. So this is your responsibility as a engagement partner with respect to the identified situations. Got it? Yes, sir. Next, question number 9. As per SQC1, firm's system of quality control should include policies and procedures addressing each element. In this context, describe the essential elements that firm's system of quality control should include and explain the importance of communicating these quality control policies and procedures to the firm's policies. So first of all, what is meant by system of quality control? As per SQC1, every firm should have system of quality control, right? What is meant by system of quality control? System of quality control is nothing but a document which contains policies and procedures in order to ensure quality within the firm. So there are 6 elements for this system of quality control. Nothing but in this system of quality control, policies and procedures related to these 6 elements will be present. So what are those 6 elements of a system of quality control? They are asking you in the question. Getting it? So first one is leadership responsibility for quality within the firm. To remember these 6 elements, you remember the term leadership. With the help of term leadership, you can memorize all these 6 elements. How? First, L for leadership responsibility. Next, in leadership, E for ethical requirements. Next, A for acceptance and continuance of a client relationship. Next, this D, you replace D with H and it becomes human resources. Next, after D, E for engagement performance. Now all these five aspects should be monitored properly. These are the 6 elements of system of quality control. That means in the system of quality control, policies and procedures related to these 6 aspects should be there. Got it? Yes, sir. Next, question number 10. See, this question number 10, it is same as question number 4, which we have already discussed, right? So you can go through that. Yes, by this question and answers of chapter number 10, audit quality, that is SA 220, SQC1 are completed. Now I'll open next chapter. Now we'll start question and answer discussion of chapter number 11, which is audit of different entities. Starting with question number 1. It is the duty of Comptroller and Auditor General of India to audit and report all expenditures from Consolidated Fund of India and of each state and of each union territory having legislative assembly, and to ascertain whether monies shown in accounts as have been disbursed were legally available for and applicable to the service or purpose to which they have been applied or charged, and whether expenditure conforms to authority which governs it. All this is irrelevant. The actual question starts here. Discuss in above context what is understood by Consolidated Fund of India. What is its importance? So what is meant by Consolidated Fund of India? It is the fund that the government of India maintains. Whatever the income that the government of India receives, whatever the loans that the government of India takes, all of that, it will get credited to this fund. And whatever the expenditure that the government wanted to spend, that will be spent out of this fund. So that is the purpose of Consolidated Fund of India. You can think this Consolidated Fund of India as a bank account of government. Getting it? Yes. Next, question number 2. CA Akash Virmani is auditor of a partnership firm consisting of 4 partners. During the year, one of the partners has retired and another partner has joined the next day. Discuss any one point which shall be considered by you to ensure that financial statements of a firm are not misstated due to change of constitution of a firm. So you have to read the partnership agreement or retirement deed to check what are the terms and conditions with respect to retirement, and you should also check whether profit sharing has been properly done for the retiring partner and has been given or not in the books of accounts, whether the treatment has been done properly or not. This you have to check, right? Like this, certain points you can write down. Since they have asked only one point, you can write many points. Next, question number 3. A society has been formed by pan India employees of public sector bank. The purpose of society is to promote savings habits of members and to grant loan to them up to small specified amount. Small savings are promoted among members by way of a compulsory contribution from monthly salary. Identify the type of society. What type of society it is? It is a pan India society. So pan India means in many states it is present. That means multi-state cooperative society. So the type of society they are mentioning is multi-state cooperative society. And also discuss nature of books of accounts to be maintained by such a society. So the society has to maintain the books of accounts which will contain all the expenditures and incomes received by the cooperative society, and it should also maintain the books of accounts that will show all the assets and liabilities of a cooperative society. So books of accounts showing these two things should be maintained by cooperative society. Got it? Yes, sir. Next, question number 4. You are auditor of a school operating in your city. During the audit of a year, it is noticed that Fees concession to students have been provided in substantial number of cases. Discuss how you as an auditor would proceed to verify the same. So if any discount in the fees has been given to any of the student, how will you check that? You have to check whether there is a proper authorization from top level management for that discount, and you should also check the internal controls operating around this aspect. So proper authority authorization is there or not, verify the internal controls. Got it? Yes, sir. So that is how you will verify the concessions given to the students. The main point you need to write down is whether that concession has been properly authorized, approved by the top management or the school management. Next, question number 5. A government department has been allocated a budget for infrastructure development. During the audit, auditor observes the following. There are certain 5 points given, and after reading those 5 points, they are asking you to identify the different types of audits applicable to each of these observation. So in each of the situation, which type of audit you will do is what they are asking. Let us read the situation and we'll give the answer. Some payments were processed without proper approval from the competent authority. So authorization, correct or not? So here you will do audit of sanctions. Sanction means nothing but authorization. So audit of sanctions, or you can call audit of authorization, you will do. Next, large scale project was implemented, but no assessment has been made regarding expected benefits were achieved or not. So whether the required output has been achieved or not, in order to check that, you will call it as effectiveness, correct or not? Here this point is speaking about effectiveness of the project. In order to identify effectiveness of project, you will do performance audit. Performance audit, you will check economy, efficiency, effectiveness. 3 is correct. Yes, since second point is speaking about effectiveness, you will do performance audit. Next, funds were utilized from an account for which no budgetary provision was made. So only if expenditure is having the provision, you have to incur the money for that expenditure. Without having provision, you should not incur the money, correct? You will call it as audit against provisions. Audit against provisions you will do. Yes. Next, certain expenditures were made without following prescribed financial regulation. That means audit against rules and orders, or rules and regulations, you can say. Next, there were instances of unnecessary spending that did not align with financial propriety. You will do propriety audit. So these are the 5 types of audits that you will suggest. So performance audit, audit against provision, audit against rules and orders, and propriety audit. Next, question number 6. No inspection under section 79 of Multi-State Cooperative Society Act 2002 shall be made unless notice has been given to Multi-State Cooperative Society. Explain clearly when and how such inspection can be done. Also state the powers available with central registrar in this regard, along with provisions relating to communication of inspection report under the said section. So if you see in this chapter, there are 3 concepts. One is a special audit, which will be done by central government. Another one is inquiry, which will be done by central registrar. Another one is inspection, which will be again done by central registrar. Students will be confusing with respect to these 3 concepts. You should not confuse. Special audit is different, which is done by central government under certain different scenarios. Inquiry, inspection are different. Inquiry is done by central registrar, inspection also done by central registrar. Now inquiry and inspection. In the question they are asking about inspection. Okay, mostly the points with respect to inquiry inspection will be same, the applicability will be same, just that inquiry can be ordered even by the request of creditors, but for inspection creditors cannot request. Understanding, that is the only difference, remaining everything same with respect to the situation when inquiry inspection can be done, both are same except that creditors point. So now they are asking about inspection, when central registrar can order for the inspection of a multi-state cooperative society in the following situation: if it has been requested by federal cooperative society, or it is requested by not less than one third of the members of the board, or not less than one fifth of total members of multi-state cooperative society. If any of these people request for inspection, then central registrar can order for inspection. And how this inspection can be ordered? By general or special order. The registrar, it can by a order ask the inspection to be started against the cooperative society, multi-state cooperative society. Next, before starting the inspection or before ordering the inspection, opportunity of being heard should be given to that multi-state cooperative society at least 15 days, not less than 15 days. And what are the powers that are available in the inspection? So inspection is more severe when compared to inquiry. Okay, so in inspection more powers will be there, in inquiry less powers will be there. Getting it? Yes. Now in inspection, the person who has been appointed to do the inspection, that person will be having access to all books, accounts, papers, vouchers, everything access he will be having, because in order to do the inspection he need to have access to all these things. Without having access to these things, how can he do the inspection, right? Yes. Next, he shall also have power to verify cash balance, and he is also having a power to call a meeting of society, and he can also ask every officer or member of multi-state cooperative society to furnish such information with regard to working of society. All these powers are available with a inspector who has been appointed to do the inspection. Next, audit against rules and orders aims to ensure that expenditure conforms to relevant provisions of a constitution and of the laws and regulations made thereunder. Yes, so in case of audit against rules and regulations, what you will do, whatever the expenditure has been incurred, is that expenditure as per laws and regulation or not, as per the rules or not, you will check. Now, the job of audit is to see that these rules, regulations, and orders are applied properly by the subordinate authorities. It is, however, not the function of audit to prescribe what such rules, regulations, and orders shall be. See, government will prescribe the rules and orders. Auditor will not give any suggestions, will not prescribe any rules and regulations. Instead, what the auditor will do is, auditor will check up whether expenditure is as per that rules and orders or not, and whether rules and orders are proper or not, that auditor will check. But auditor will not prescribe the rules and orders. That's what they are saying. Yes, that is correct only. Now analyze and explain. So here you need to write what will be those rules and regulations against which auditor will verify the expenditure that has been spent. So there will be three rules and regulations. First, rules and orders regarding power to incurrence action expenditure from consolidated fund of India. So in order to take out money from consolidated fund of India, in order to expend any money from consolidated fund of India, certain rules and regulations are there. So whether those rules and regulations are complied for taking out money from consolidated India or not, you need to check that. Next, for claiming any reimbursement, for submitting reimbursement forms to the government, there are certain rules and regulations. So rules and orders dealing with mode of presentation of claims against government for withdrawing money, whether that rules and regulations are followed or not. Next, for paying salaries to the government employees, for deciding their term of service, for all those things also there are certain rules and regulations. See, rules and orders regarding condition of service, pay and allowance and pension of government servants, nothing but government employees. Whether with respect to salaries of government employees also the respective rules and regulations have been followed or not, you have to check. So expenditures, in case of audit against rules and orders, you will check expenditure against these three rules and regulations. Got it? Yes. Now, auditor is not having power to prescribe rules and regulations. These rules and regulations will be prescribed by the government. What the auditor will do is he can check whether these rules and regulations are unconstitutional or are these as per constitution only. So auditor needs to see that these rules and regulations are not inconsistent with any provisions of constitution, and these rules and regulations are also consistent with essential requirements of audit and accounts, and they do not come in conflict with any orders that have been passed by higher authorities, and in case they have not been separately approved by competent authority, issuing authority possess necessary rule making power. But see, auditor will check these things, but auditor will not prescribe the rules and regulations. Got it? Yeah. Next, while planning the audit of NGO, non-government organization, the auditor may focus on knowledge of NGO's work, its mission, vision, updating knowledge of relevant statutes, especially with regard to recent amendments, circular, etc. Explain other relevant points auditor needs to focus while planning the audit of NGO. So, while planning audit of NGO, what points should be considered by the auditor? First of all, auditor should obtain understanding of nature of activities that this NGO is doing. Next, auditor should also obtain understanding of laws and regulations that are applicable to this NGO, and what is the legal form of this particular NGO, that also you need to understand. So knowledge of NGO, knowledge of relevant statutes, legal form of the organization, that means whether it has been incorporated as a society, trust, section 8 company, the legal form you have to see. Based on that relevant documents you have to check. If it is section 8 company, MOA, AOA, if it is a society, charter will be there, like that you have to check, right? Next, organization chart you have to go through. Next, you should also go through the minutes of meetings of board and the managing committee. Next, you should check how the accounting system of NGO is present, how they are maintaining books of accounts and the materiality levels. So in this NGO, misstatement of how much amount will be material, you need to fix the materiality level. And while doing the audit of this NGO, do I require any help of experts? You should also see that involvement of experts and previous year's audit report. You need to once go through the previous year audit report. All these are certain things or certain information that you will go through while doing the audit of NGO. Next, question number 9. While auditing a renowned 4-star hotel in Pune, C.S. Ray observes a gift shop operating within the hotel premises. On further inquiries, he comes to know that stock in gift shop belong to gift shop owner only, and hotel receives rent for letting out this space. Discuss how auditor can verify payment of common amenities used by gift shop owner. So in the hotel there is a small space, gift shop, that space has been rented out by the owner, by the hotel owner, to other person. Whatever the gifts that are present in gift shop, they belong to the gift shop owner. Now how will you audit this? Now here, since hotel has rented out that gift shop, there will be rental agreement, right? You need to go through that rental agreement, and gift shop owner will be giving rent every month to the hotel owner. So you need to audit the receipt of rent through bank statement and the vouchers. Next, there will be utility bills like water bill, electricity bill. These utility bills will be separate to the gift shop and separate to the hotel, correct or not? Gift shop will also be consuming certain utility, certain electricity, certain water, these will be consumed. Now for that electricity, for that utility, the hotel has to charge amount from the gift shop. So whether this amount has been collected from the gift shop owner and has been properly recorded in the books of accounts or not, you need to check. So read the rental or lease agreement, verify rent receipts. If any taxes have been collected from the gift shop, those taxes has to be properly deposited with the government, right? Utility consumption and collection, you have to ensure whether there are proper controls with respect to utility consumption and collection. And verify hotels utility bill. Auditor should verify that amounts charged for such amenities have been appropriately recorded in the hotel books of accounts. And auditor should see that cost of repairs and minor renovation, if any repairs minor renovation has been done to the gift shop, those costs should be charged to revenue account but not capital account. Those expenditures should not be capitalized. Minor repairs and renovations should not be capitalized, they should be charged to revenue account. So that is, those are the points that you will check. Next, question number 10. As per Multi-State Cooperative Societies Act 2002, the auditor shall make a report to the members of multi-state cooperative society on the accounts examined by him, and on every balance sheet and profit and loss account, and on every other document required to be part of or annexed to the balance sheet or profit and loss account. Explain. So the audit report that the auditor issues to multi-state cooperative society, in that audit report there should be certain points that should be present. If you remember, under 143 subsection 3 of Companies Act, there are certain points that should be present in the audit report. Same type of points will be there here also. So see, auditor's report shall state whether he has obtained all information and explanation which to the best of his knowledge and belief are necessary for the purpose of his audit. So did he obtain all the information and explanation or not, he needs to mention in the audit report. Next, whether in his opinion proper books of accounts has been kept by the cooperative society, and if it is having any branches, whether proper records of the branches has been received by the auditor or not, that also should be mentioned. So received from the branches the proper records which are not visited by him. Next, if any branches were not audited by the main auditor, did he receive the audit reports from the branch auditors? So whether report on accounts of any branch office audited by any other person other than the multi-state cooperative society auditor has been forwarded to the multi-state cooperative society auditor or not. And finally, you should also mention whether the financial statements, profit and loss statement, balance sheet, are they in agreement with the books of accounts or not. If you remember, all these 4 points, they are similar to the points that we have seen in 143 subsection 3, basic points only, right? Yes. Next, question number 11. Helping Hands Cooperative Society is working for the welfare of its members since last 10 years. Governing body observed that society had some idle funds during the financial year 23-24, and considering the considering the equity markets growth, decided to invest the same in blue chip mutual funds. Decision brought fortune, and society earned handsome return on the investment made. Auditor of the society, however, gave a qualified opinion. Management has hired you to guide where they went wrong. Give your comments considering section 32 of the Central Act. Now, what happened here is, in this situation, this cooperative society has invested its funds in the stock market. Can it invest its funds in the stock market? The answer is no. Cooperative society can invest its funds in other cooperative society, other state or central government's cooperative society, or any other cooperative society, and it can also invest its funds in the safe investments. What is that safe investments? In section 20 of Indian Trust Act, there is certain list of safe investments provided. In that safe investments also you can invest your money, right? So in the central, you can invest your money, you can, the cooperative society can invest its money in central or state cooperative bank, or in any cooperative bank other than state or central cooperative bank. and in any of the securities specified in section 20, in the shares, security, bonds, debentures of any other society, and in any other money is permitted by central government, central or state government. Only in these permitted investments cooperative society can invest. Getting it? Yes. In the given situation, cooperative society has invested in the stock market, which is not proper. That is the reason why auditor has given a qualified opinion, right? Yes. Next, question number 12. CAP was consulted by one of his friends, Mr. Robin. Robin informed him that he wants to enter in education sector and invest in one of the schools being operated in the city. The operations of school will be managed by Robin only, and the proposed investment will be made once CAP confirms the revenue figures given to him by existing management of the school. CAP said that main source of revenue to school is fee from students and that will be verified. What special steps are involved in verification of fees collected from the students? So all this question is irrelevant. Just last line, by reading last line you can answer the question. This is a direct question. In order to do audit of school fees, what procedures you will perform? First of all, you will match attendance register with the fee register, whether all the names present in attendance register are also present in fee register or not. Next, you will vouch the fee receipts with the bank statement and the respective receipt vouchers, correct? Yes. And you will also ensure that before closing the account of a student, all the fees that has to be collected from him, including hostel fees, has been collected and closed, correct or not? Yes. Still there are some more points. Admission fee has to be credited to capital fund. So whether admission fee has been credited to capital fund or not, you will see. And if any student has paid advance fees, that advance fee has to be carried forward to the next year. So fee in advance has to be carried forward. And if at all for any student concession has been given, discount has been given, auditor needs to see whether that discount, free concession, has been authorized by school management or not. So free studentship and concession has been authorized by top level management or not. And any fines for late payment have been properly collected and credited to the account of school. And confirm that hostel dues were recovered before students accounts were closed. And also match student fee register with the class as attendance register. Check fee received by comparing counterfoils of receipts granted with entries in the cash book. So all these are certain procedures that you will perform with respect to the school fees. Next, question number 13. Section 77 of Multi-State Cooperative Societies Act 2002 states that central government may at any time by order direct that special audit of multi-state cooperative societies accounts for such period or periods as may be specified in the order shall be conducted. Further, it may by some or different order appoint either a chartered accountant or multi-state cooperative society auditor himself to conduct the special audit. Now that is, this is irrelevant. The question starts from here. Under which circumstances such power can be exercised by central government? So in which situation special audit can be ordered by the central government? If the central government feels that affairs of a multi-state cooperative society are being conducted against the self-help and mutual deed concept. So the cooperative society has been formed with the purpose of self-help and mutual cooperation. Now the cooperative society is not operating on the lines of self-help and mutual cooperation, then central government will order for a special audit, right? Yeah, for a special audit it will order. Next, if a multi-state cooperative society is being managed in a manner likely to cause serious injury or damage to interest of trade, so cooperative society is doing its business in such a manner that it is not allowing any competitors to enter, it has become monopoly, causing serious threat or injury to trade, then also central government will order for that special audit. Next, if financial position of multi-state cooperative has weakened and it is resulting into insolvency, it is raising questions on the solvency of the multi-state cooperative society, then also it will order for the special audit. So these are the situations in which special audit can be ordered, and so that is the answer for this. Here they have given certain scenarios, and you need to mention that these scenarios are suggesting these particular situations and a special audit can be ordered. Okay, yes. Next, question number 14. Section 72 subsection 1 of Multi-State Cooperative Society Act 2002 states that only a person who is a chartered accountant within the meaning of Chartered Accountant Act 1949 can be appointed as auditor of a multi-state cooperative society. Yes. Who according to section 72 subsection 2 is disqualified from being appointed as auditor of multi-state cooperative society. They are asking disqualifications of auditor. First of all, a body corporate cannot be appointed as a auditor, right? Yes. Next, an employee or officer of a cooperative society cannot be appointed as auditor. Next, if you have taken any loan, if you are indebted to cooperative society, or if you have given any guarantee on behalf of a third party's debt to cooperative society, then also you cannot be appointed as auditor. If you are a member or employee of officer or employee of the cooperative society, then also you cannot act as auditor, right? So these are the four disqualifications. Next, question number 15. While auditing the financial statements of a Bro Traders LLP, CAL is carefully going through LLP agreement. Briefly discuss the key points CAL should pay attention in the LLP agreement and the reporting responsibilities of CAL concerning the financial statements of Bro Traders LLP. So with respect to LLP, the points that you will consider while doing audit of LLP: engagement letter you need to enter into, and you should also read the minutes of meetings, and you should read LLP agreement and obtain all these information. These are all basic points only, like what is the profit sharing ratio, what will be the salary paid, how many partners are there, what is the nature of a business of LLP, what is the name of LLP. All these basic points you have to understand. And reporting, the auditor should mention whether records of the firm appear to be correct and reliable. In the audit report you need to mention these points. Next, whether he was able to obtain all information and explanation which is necessary for his work, and whether any restriction was imposed upon him by management. So all these points he needs to report in the audit report of LLP. Next, question number 16. An NGO based in Kolkata collected significant donations for flood victims in Bihar. The funds were distributed to various NGOs operating in Bihar to support relief efforts. You have been appointed as auditor for this NGO's accounts for the year in which it collected and disbursed these donations. Draft an audit program to audit the receipts of donations and remittance of collected funds to different NGOs. So what happened here? There is a NGO. This NGO collected donations, and donations collected by this NGO has been further disbursed by this NGO to different NGOs. Like this, to different NGOs it has disbursed. Now you have been appointed as auditor of this particular NGO. You need to audit collection of donations, and you should also audit disbursement of donations on other side. Both these you need to audit. How you will audit? First, with respect to collections, you need to check whether there is a proper internal control system with respect to collection of donations, like amount should be collected by one person and receipt should be issued by another person, and all the collected amount should be deposited into bank account. Like this, various internal controls should be there with respect to collection of donations. And once you collect the donation, receipt will be issued na. Unused receipt books should be kept in the safe custody so that those unused receipt books will not be misused. Understanding? Next, if at all donation has been collected through checks, then in the receipt book, the name of the person who given that check, check number, amount of the check, all those things needs to be clearly mentioned with respect to amount received through check. And with respect to amount received through cash, you need to verify the entries in the cash book, so cash receipts. And if amount is received through foreign contribution, foreign donation, then you need to check compliance with various laws and regulations, like FEMA compliances has to be made, FCRA, foreign contribution regulation act compliance has to be made, right? So third point, fifth point, sixth point are different forms of receipt of donations. One is through check, one is through cash, another one is foreign contribution. You can easily remember those 3 points. And finally, you need to perform a bank reconciliation. So these are the points with respect to verification of collection of donations. After collecting donations, you will disburse these donations to different NGOs further, correct? Now, with respect to that disbursement, you need to check how these disbursement has been made. Ensure that these remittances are made only through the account payee checks. Remittances should not be in cash or normal bearer checks. It should be through account payee check or through account to account transfer or through demand draft. So mode of sending remittances has to be checked. Next, confirming the receipt of remittance. Once you have remitted the amount, the respective receipt will be there. You need to check that receipt. Next, you should also check identity of NGOs to whom amount has been disbursed, like their registration certificate you need to obtain, their address you need to obtain. All these, through all these aspects, you need to check identity of that particular NGO to whom the amount has been remitted by your NGO. So identity. Next, you can also send a direct confirmation to that particular NGO. See NGO, in the books of accounts of this particular NGO, it is being shown that 20 lakhs has been transferred to you as donation. Have you really received 20 lakhs? Like that, you should ask for confirmation. Next, the amount of donation which you have given, there will be certain purpose for it. Like if you have given the donation saying that it has to be used for free education, then that particular NGO should also use it for free education only. For other purposes, you should not, it should not use it. So donation utilization and system of NGO selection. Here, this particular NGO disbursing the donations to various NGOs. How these NGOs have been selected? Is there any criteria for that? Auditor needs to see that. So this is how you will audit that particular aspect. Next, you are appointed as auditor of a prestigious township club. As the auditor of the prestigious township club for the financial year 23-24, what are the key points you would consider while auditing income and expenditure items of club? See, this is a direct question. So all the points we have already discussed while seeing the chapter. Same copy paste you have to keep them. Understanding all the points. Nothing more explanation will be involved here. All the points you need to remember and copy paste. Next, question number 18. Aman Cooperative Society appointed Fab and Associates as an auditor for the financial year 23-24. During the audit, auditors noted the following. Number of shares of society is 1000 shares. Each value of each share is 10 rupees. Net profit before compulsory transfer to reserve fund is 10,000. Net profit after compulsory transfer to reserve fund is 8,000. Okay. Mr. Dharia, a member of society, holds 200 shares amounting to 2,000 rupees from the previous year. Now, with respect to holding of shares, there is a limit. Single person can hold maximum of 20% of total number of shares or shares worth 1000 rupees value, whichever is lower, right? Here if you see 100 shares multiplied by 20%, it becomes 200 shares, correct or not? 200 shares multiplied by 10 rupees, it becomes 2000 rupees. Now 2000 rupees or 1000 rupees, whichever is lower, 1000 is lower. So maximum in this NGO, in this society, you can hold only 100 shares. Okay, 100 number of shares you can hold, but Dharia is holding 200 shares, so she has crossed the limit. You need to mention that point. Next, second one, upon verifying the society's borrowings, auditor found that cooperative society had accepted a loan from Mr. Shivam, a non-member. Can cooperative society accept loan from non-member? Yes, it can accept loan from non-member, subject to provisions of bylaws. In the bylaws, if it is not restricted, if it is uh, not mentioned that society should not accept any loan from non-member, until and unless such point is mentioned, society can freely accept loan from the non-members also. Now the auditor did not find any restriction regarding this in the society's bylaws. Since there is no restriction in the society's bylaws, this society can accept loans from the non-members also. Same point you need to mention. Okay, so she can hold only maximum 100 shares, and Aman Cooperative Society had accepted loan from Mr. Shivam, a non-member. Since there is no restriction regarding the acceptance of loan received from non-member in the society bylaw, the loan received by received from Shivam is permissible. Bylaw means nothing but like MOA and AOA of the society. Okay, yeah. Next, question number 19. Sanskar Foundation is a non-government organization for orphan children. They have received voluntary contribution of 50 lakh from the promoters, specifying that 20 lakhs are towards the corpus donation. What is meant by corpus? Corpus means nothing but capital of the uh, NGO or capital of that particular organization. You will call it as corpus fund. Now this corpus fund, it can be used for any purpose. There will not be any specified purpose. You can use it for any purpose you wanted. That is corpus fund. And 30 lakhs towards revolving fund. What is this revolving fund? Generally for the revolving fund, there will be purpose. The main purpose for the revolving fund is, from this revolving fund, you will give loan to the other person, and after giving loan, that other person, he will repay the amount along with interest. Those repayments along with interest will be credited to this revolving fund. Again from this revolving fund only, again further loans will be given. Again the interest principal will be again credited to this fund only. Like that it will be revolved. So you are calling it as revolving fund. Okay, so what they are asking, explain the terms corpus contribution and revolving fund. I've already explained it. You have to write those definitions. Next, question number 20. You have been appointed as auditor of a cooperative society. During the course of audit, you have noticed some serious irregularities in the working of society. Enumerate those special matters for reporting to register. So in which situations auditor of a cooperative society will give special report to the registrar? In 4 situations. During the audit, if auditor found that members of cooperative society, members of managing committee of cooperative society are making personal profits out of the cooperative society, so personal profiteering by members of managing committee of society, in such a situation, auditor will make a special report mentioning this point to the registrar. Next, if auditor has found any frauds, detection of frauds in the cooperative society, then also he will make a special report to the registrar. Next, if auditor files found that cooperative society is not being managed properly, mismanagement is going on, or disproportionate advances to vested interest group. Vested interest group means nothing but related parties. So cooperative society is giving huge amounts of loans to these vested interest party related parties, then also auditor will make a special report to registrar. Got it? Yes sir. Next, question number 21. P Financial Services Limited is a leasing and hire purchase company. You, as an auditor of PFSL, are in the process of examining finance lease agreements executed by them for equipment given on lease. Which points shall be noted by you while examining particular finance lease agreement entered into by PFSL in respect of leasing transaction? So, while reading lease agreement, what points needs to be considered by you? You need to consider description of lessee, description of lessor. Description means nothing but is it a company or individual, what is their address, these kind of things, and also description of leased assets. All these things you need to identify from the agreement. Then from the agreement itself you should also identify what is the value of lease amount and what is the tenure of payment, on which date this lease will start. These points also you need to identify. Next, you should also identify whether the leased asset, should it be returned to the lessor at the end of the lease period, or is he having option to keep that leased asset with himself, and whether agreement prohibits lessee from assigning or subletting. So is there any point in the lease agreement which prohibits lessee from further subletting it or from further subleasing it? These points you need to see by reading the lease agreement. Got it? Yes, sir. Next, question number 22. JK Limited has opened a new manufacturing unit, and for that they want plant and machinery. Since the capital outflow will be huge, they are considering of taking it on lease. They have approached several parties and have shortlisted one of them who is ready to give the plant on lease for 11 years, which is approximately the estimated economic life of the asset. As per the agreement, JK Limited will bear the insurance and maintenance expenses of the asset. Which kind of lease agreement have JK Limited entered into? Since this lease agreement covers almost complete useful life of asset, and maintenance and everything is done by JK Limited only, you can call this as a finance lease, right? And what is the ownership status? So the ownership status lies with the lessee himself, JK Limited itself. Accounting treatment and tax benefits of the same. First of all, you need to say that this is a finance lease, right? So where is that point? Same will be considered as finance lease. Next, status of ownership. Lessee in his books of accounts he will recognize the asset. ROU asset he will recognize, right of use asset. Next, accounting treatment. With respect to accounting treatment, lessee can charge both depreciation as well as interest expenditure, and it will be treated like a loan, correct? So since it is a finance lease, it will be treated as a loan. On loan, interest can be booked as expenditure, and ROU asset also will be recognized. On that ROU asset, depreciation can also be claimed. So hence the asset ownership is considered of that of lessee. And tax benefits, for the purpose of tax benefits, you can claim both interest as well as depreciation as expenditure. Got it? Yes, sir. Next, question number 23. Messrs. PQ and Co. Chartered Accountants have been appointed as statutory auditors of CBD Multiplex Cinema Limited. The audit team started the audit and verified the ledger and other books of accounts for financial year 24-25. However, one of the team member is of the view that internal control mechanism of the company should be verified. Can you guide the audit team about the areas that will be covered in verifying internal control mechanism in the area of tickets in case of cinema hall? So you need to ensure that entry into cinema hall is only after checking the ticket. At the entrance there should be some person who checks the printed tickets, and those tickets should be serially numbered. That is also one of the internal control. Next, you should give separate series of tickets for morning show, afternoon show, and evening show. There should be separate series of tickets. And advance booking, the series of tickets that you use for advance booking should be separate series. And inventory of unused tickets, they should be kept properly. Understanding? So these are the internal controls that you have to mention with respect to tickets of cinema hall. Next, question number 24. You are appointed as auditor of Mrs. Shine and Co., a partnership firm. During your review, you observed that audit appointment was informal and not documented properly, which is not correct. Appointment of auditor, it should be proper, it should be properly documented, there should be engagement letter, right? The firm started a new business activity which is not covered in the partnership deed. Can it do that? No. If you wanted to do any business activity, that activity should be permitted by the partnership deed. Understanding? Next, major financial decisions were made without proper records. It seems this is also not proper. Now, as an auditor, briefly explain matters that should be specifically considered by you while auditing the accounts of a partnership firm. So while auditing accounts of partnership firm, what matters should be considered by you? First of all, you need to enter into a engagement letter. There should be a letter of appointment. Next, you need to read the partnership documents, nothing but partnership agreement you need to read, and various minutes book, all these documents you need to read them. And from reading the partnership agreement, you need to identify objects of the partnership, and you need to go through the books of accounts. Mutual interest should be there, and provision for taxes, has it been made properly or not? Division of profits, has the profits been divided only after charging depreciation or not? All these points you will check. And that a profit should also be divided in the profit sharing ratio that is agreed in the partnership agreement, right? All these points you will check with respect to partnership. Next, question number 25. A government department conducted an inventory audit and it is discovered that several items in inventory were found to be either damaged or obsolete, but they had not been removed from the records. There were no periodic physical verification reports of inventory, and the valuation of materials in stock was outdated. Explain how the audit of stores and inventories as part of expenditure audit under the duties or and responsibilities entrusted by Comptroller and Auditor General of India can help address these issues. So they are asking you how you should perform audit of inventories and stores. So you need to ascertain whether there are proper rules and regulations are there with respect to purchase of inventory, receipt of inventory, custody of inventory, issue of inventory, and sale of inventory. With respect to these aspects, whether there is a proper rules and regulations or not. Next, while physical verification, if any deficiencies are noticed in the inventory, whether those deficiencies has been properly brought to the notice of a government or not, because this is a government audit, you have to bring the deficiencies to the notice of a government. Next, purchases of the inventory should be properly authorized, properly sanctioned. Sanctioned means nothing but properly authorized. And whatever the prices that are paid for purchase of inventory, that prices should not be excess. Okay, reasonable prices should be paid. And for each and every purchase invoice, auditor should also check quality certificate of that particular inventory, because the purchase price that will be paid is dependent on quality of inventory that you have accepted. So the auditor should also check quality certificate of that inventory, and check accounts of receipts, issues, and balances regarding accuracy and correctness and reasonableness of balances in the inventory. Nothing but you need to check the books of accounts with respect to inventory. Those are certain points with respect to audit of stores and inventory in case of government. Next, question number 26. You are appointed as auditor of a Great Eastern Hotel, a 5-star hotel, for financial year 24-25. See, the questions from this particular chapter, they will be general questions, like the answers that you give to these questions, they much explanation will not be involved in those answers. those will be self-explanatory points will be there. Understanding? Now, as an auditor, what are the special points that need to be considered in verifying the inventories in the nature of food and beverages? So, with respect to inventory of a hotel, you need to check, auditor needs to check whether the location where the inventory has been kept is that location properly locked, and that lock should be kept in the custody of a proper officer. Understanding? And the lock should not be given to people, to everyone, only to trusted people the lock should be given. The lock of that inventory location should be given only to the trusted people. You should not give that lock to unauthorized people. Next, for the purpose of valuation of inventory in the hotel, generally hotels will appoint specific valuationers. So auditor can decide whether to use that valuationer's valuation report, or he himself can appoint another valuationer. So specialized professional valuationers. And next, auditor should ensure that all inventories are valued at the end of the year, and that he should himself be present at the year end physical verification. This is a simple point. At the time of physical inventory verification, auditor should also be present at the inventory verification, right? Yes. Next, question number 27. Goods and service tax network, GSTN, is not for profit limited by shares company. It's a 50% shareholding is with union government, that means central government, and 50% with the state government. So this is a government company. GSTN is a government company. Now the company provides IT infrastructure and services to various stakeholders, including governments and taxpayers. The company is in operation since past few years, and subsequent auditor needs to be appointed during financial year 23-24. Who appoints statutory auditor of such a company described above in accordance with provisions of Companies Act 2013? Can any directors be issued to can any directions be issued to the statutory auditors of above company? First of all, who will appoint the auditors of a government company? Comptroller and Auditor General of India will appoint auditor of this particular GSTN also, since it is a government company. And yes, Comptroller and Auditor General of India can give directions, guidance to the auditor on how to do audit of that particular GSTN. And Comptroller and Auditor General of India can also mention the points that should be present in the audit report of the auditor. Got it? Yes. Same thing you need to write down. Next, question number 28. This question number 28, see, as an auditor, explain the important audit procedures you would perform while auditing hospital. So with respect to audit of hospital, what points you will consider? This is a direct question. See, audit of club, audit of hospital, audit of school, and audit of cinema hall. All these four, there is a list of points that you will consider. Certain 10 to 12 points will be there. From that 12 points, you remember any 8 points and write down that 8 points. That will be sufficient. Okay, those points, they will be self-explanatory points. See, here there are 13 points. Of you need not write all the 13. Remember 8 to 10 points and write them. Okay. Yeah. Next, question number 29. Sun and Moon Credit Cooperative Society Limited, a large scale cooperative organization, operates in Maharashtra and engages in providing small loans to its members. During the audit, the auditor observed that society maintains cash book and ledger, but has not maintained separate registers for loan disbursement and recovery of loans from members' salaries. The management contends that since they maintain the main cash book, there is no need to maintain other subsidiary records. As an auditor, explain whether society's practice is appropriate and what records should be maintained. See, generally cooperative societies should maintain those records which will show all the monies received, all the monies expended, all the purchases and all the sales, all the assets and all the liabilities. Showing all these things, records should be maintained. And in case cooperative society is in the business of giving loans, it should also maintain following records: daily cash sales summary register, register of collection from debtors, register of recovery from loans, loan disbursement register, and any other columnar subsidiary. So all these records should also be maintained by the cooperative society, depending on nature of the nature of business of the cooperative society. Got it? Yes, sir. Next, question number 30. ABC Limited is a government company whose statutory audit is being carried out by auditors appointed on the advice of Comptroller and Auditor General of India. During the audit, the C&AG considered it necessary to conduct test audit of the company's accounts. He issued specific directions to statutory auditors regarding the system of bookkeeping and internal control. After completion of a statutory audit, auditors submitted a copy of their report to C&AG, who added certain comments and supplementary observations to it. Board of Directors of ABC Limited, however, decided not to provide any explanation or reply to the comments made by the C&AG. Now, based on above, explain the powers of C&AG in relation to test audit of a government company and whether Board of Directors is required to provide any explanation on the C&AG comments. Now, here there are two concepts. As per 143 subsection 7, there is a test audit. As per 143 subsection 6, there is a supplementary audit. Now, with respect to test audit, central government C&AG is having power to order for test audit. Now, how the test audit will be ordered? Basically, auditors, they will do audit of all the government companies and they will submit audit reports to C&AG. Now, C&AG randomly it will select some audit reports and it will ask the auditors to do test audit of these companies to just to test whether audit has been done properly or not. That is known as test audit. So, without prejudice to provisions relating to audit and auditor, C&AG in case of company covered under subsection 5 or 7, that means in case of government company, can order for test audit. And with respect to test audit, provisions of section 19A of C&AG will be applicable. And C&AG can also direct the manner in which company account shall be audited by the statutory auditor. This point we have already seen. And once the statutory auditors have given audit reports to C&AG, C&AG within 60 days, it is having power to order for supplementary audit. Now, what is difference between supplementary audit and test audit? In case of test audit, randomly some companies, some audit reports will be selected and will be ordered for test audit, right? Whereas in case of supplementary audit, after seeing the audit report, the main audit report, C&AG felt that auditor has not done this audit properly. So it will ask supplementary audit of this particular company. Randomly, it will not select some companies for supplementary audit. It will go through the complete audit report, complete audit, and if it feels that this audit has not been done properly by the main auditor, then it will again order for supplementary audit. Getting it? So within 60 days, C&AG can conduct a supplementary audit. It can also comment upon or supplement such audit report. And for whatever the comments that C&AG has given with respect to audit, reply to that comments need not be given by board of directors. Understanding? If statutory auditor has made any comments, further reply can be given, but for C&AG comments, no reply need to be given by board of directors. That is point number C. Section 134 subsection 3 of Companies Act 2013 imposes duty on board of directors of company to give explanation or comments on every reservation, adverse remarks or disclaimer contained in the audit report and secretarial audit report of a company secretary in practice. But in the absence of similar provision requiring company to give reply on reservation made by C&AG. So 134 subsection 3 says that if a company auditor has mentioned any points in his audit report, any qualifications in his audit report, for that qualifications, board of directors have to give reply. But for the comments made by C&AG, board of directors need not give any reply. Understanding? The same point they are saying, by C&AG, board of directors of such company is not bound to give any information or explanation in respect of such comments. This point is important. Okay, this is what they are asking in the question. Okay, because board of directors, they have not replied to the comments of C&AG. So whether the act done by board of directors, is it correct or not, they are asking. You need to say that yes, board of directors are correct, they need not give any reply to the comments of C&AG. Got it? Yes, sir. Next, question number 31. See, all this is irrelevant, you can just read the last point. It says explain the main checks carried out in audit of government receipts. So how will you audit government receipts? Auditor needs to check whether all the revenues that should be received by the government have been properly assessed and credited to the government account or not. Next, whether there are proper regulations and procedures with respect to effective assessment, collection and proper allocation of cases. You can read this answer with the example of income tax department. Income tax is a revenue to the government, right? Now, whether there are proper rules and regulations with respect to income tax for proper collection of the tax and crediting that to the account of the government, and identifying the cases where assessees have not paid the taxes. So whether there are proper rules and regulations for identifying these cases or not, you need to check. Next, whether such regulations and procedures are actually being carried out. Just having rules and regulations in the act is not sufficient. Those rules and regulations needs to be implemented, correct? So whether those rules and regulations have they been implemented or not, you need to see. Next, whether adequate checks are imposed to ensure prompt detection and investigation of irregularities. Review of system and procedures to see that internal procedures adequately secure correct and regular accounting of demands collection. So all this entire answer you can read it with the help with the example of income tax department. How income tax department collects the amount, how it sends notices, demand notices to the assessees. All those points you can link. Got it? Yes, sir. By this question and answer discussion of chapter number 11, audit of different entities, is also completed, right? Now let me open next chapter. Now we'll discuss question and answers of chapter number 12, which is audit of banks. So starting with question number 1, the financial statements of a bank are prepared in a specified format. Discuss legal provisions in this regard as applicable to the financial statements of nationalized bank. So if you see, there is a schedule 3 to banking regulation act. In that schedule 3, format of financial statements applicable to the banks has been prescribed. Form A contains format of balance sheet, form B contains format of profit and loss statement. So the same things you need to write down. Third schedule to the Banking Regulation Act. Form A contains balance sheet format, Form B contains profit and loss statement format. And banks, they should also comply with the requirements of Indian accounting standards while preparing their financial statements. Even that point also you have to write down. So that is with respect to the provisions, legal provisions that are applicable to the financial statements of the banks. Next, question number 2. Ranjana Ceramic Private Limited is sanctioned a cash credit facility of 100 lakhs from a branch of LMO Bank. Besides, branch has also sanctioned one-time bank guarantee of 10 lakh rupees on behalf of the company in favor of statutory authority. Discuss what type of credit facilities have been sanctioned by branch of LMO Bank to the company, along with probable purpose of each of the credit facility. So first, cash credit facility. Can we say this as funded facility? Yes, because there will be outflow of cash involved in this cash credit facility. So it is a funded facility. And the purpose of this cash credit facility is to meet the working capital requirements, right? Yes. Next, bank guarantee. Can we say bank guarantee as a non-funded facility? Yes, same thing you have to write. One is a funded facility, another one is a non-funded credit facility. Next, question number 3. During the course of audit of a branch of a nationalized bank, you find that system has generated a report marking 10 term loan accounts as SMA. SMA means special mention accounts. If you see, there are three categories of SMAs. SMA 0, basically if the account is outstanding from 1 to 30 days, you will call it as SMA 0. Next SMA 1, 31 to 60 days. SMA 2, 61 to 90 days, right? That is SMA classification. Discuss meaning of special mention accounts and significance of such a classification. So special mention account, already I told you what is the significance of a special mention account. So if the account is outstanding for more than 90 days, it will be treated as NPA, correct? Now before the account becomes NPA, in order to make bank staff to follow up that particular debtor, this category of special mention account has been brought, wherein if the borrower is not paying the money for 1 to 30 days, then it will be classified as SMA 0, and bank employees, they can focus on that account and follow up with the borrower and collect the money, so that they can avoid the probability of that SMA turning into NPA. So the significance of SMA is that only, to identify in the early stage the accounts which might turn into NPA, to identify that accounts at the early stage itself is the purpose of SMS, special mention accounts. Got it? Yes, same thing you will explain here. Next, question number 4. CAP is conducting stock audit of a borrower availing cash credit facility of 100 lakhs from branch of a bank. The cash credit facility is against security of paid stocks and debtors up to 90 days. Margin stipulated is 25% for stocks and 40% for debtors. Following further information is available as on 31st December 2022. So value of stock is 125 lakhs, value of stock fully damaged is 5 lakhs, value of debtors is 50 lakhs, value of debtors exceeding 90 days is 10 lakh, and value of creditors is 50 lakhs. Now they are asking you to calculate drawing power limit. So there is formula for drawing power limit. First of all, you have to take value of stock. So how much is a stock? 125 lakhs. Now from this you need to reduce damaged stock. How much is the damage? 5 lakhs. So it becomes 120 lakhs. Now from this you need to reduce creditors. Why you should reduce creditors? Because for creditors you are not paying any amount. Without paying money, they have given you the stock, so your money is not blocked there. If your money is not blocked in the creditors, why will bank give loan for you for that amount? So you have to reduce the creditors. It is 50 lakhs, it becomes 70 lakhs. Now from 70 lakhs the margin stipulated for stock is 25%. So reduce margin at the rate 25%. So it becomes 25%, 7, 7, 14, 14, and 17.5. Yes, if you reduce 17.5, it becomes 60, 52.5 lakhs, right? So you keep this as A. Is that correct, my calculation? Yeah, 52.5 lakhs. Next, you will take debtors. So how much is the value of debtors? 50 lakhs. From this you will reduce debtors outstanding for more than 90 days. How much is that value? 10 lakhs. You will reduce 10 lakhs. It gets 40 lakhs. From that 40 lakhs you will reduce margin at the rate. For debtors, how much was the margin kept? 40% was the margin kept, right? At the rate 40%. 40 lakhs multiplied by 40%, it is 10% means 4 lakhs, 16 lakhs. So it becomes 24 lakhs. You keep this as B. Now drawing power will be A plus B. How much? 50, 70, 76.5 lakhs. So drawing power in the given situation is 76.5 lakhs. So this is how you need to calculate drawing power. So in the examination, they have asked these type of questions a lot of times. In your book also, you will find these questions. Whenever you find the question related to drawing power, this is how you need to calculate. Got it? Yes, sir. Next, question number 5. You are verifying interest on deposits paid by branch of a nationalized bank. Discuss any two analytical procedures to verify interest on deposits paid by the branch. You can discuss many analytical procedures. If you know meaning of what is meant by analytical procedures, many examples you can frame. First of all, you can ask the bank to give total number of deposits, total amount of deposits, and you can ask average interest paid. Multiply total amount of deposits with the average interest paid, you will get the amount of interest. You will compare it with the amount of interest income that is shown in the profit and loss statement. So this is analytical procedure. Or you can compare rate of interest that your bank is paying with rate of interest other banks are paying. That is also analytical procedure only. You can compare total amount of interest paid by the bank in the current year with total amount of interest paid by your bank only in the previous year. This also comes under analytical procedure. Got it? So like this, lot of examples you can frame and give. Next, question number 6 again related to drawing power. Compute the drawing power for cash credit account of Kripa Limited for the month of March 2024 with the following information. Stock is 60,000. Okay, you will keep stock as 60,000. And from the stock, you have to reduce sundry creditors. So reduce sundry creditors. After that, margin 30% you have to reduce. So margin 30% means 15,000. It becomes 35,000. So this is A. Next, going to debtors. Debtors is 55,000. You will keep 55,000. Of this 55,000, including debtor of 15,000 for an invoice dated 20 October 2021. So an invoice has been raised for this debtor on 20 October 2023 for 15,000. From that date onwards, he is not paying it. So till 31st March 2024, he has not paid it. So how much is the period between these 2 days? More than 90 days? Yes. So any data are outstanding more than 90 days, you will reduce it. So you will reduce 15,000 from this. After that, margin for debtors is 40%. Reduce margin of 40%, 60,000. So it becomes 24,000, which is B. A plus B, 59,000. So drawing power in this given situation is lower of this 59,000 or the sanction limit. How much is the sanction limit? 48,000 is only the sanction limit. So drawing power will be always lower of sanction limit or this calculation. So 59,000, 48,000, whichever is lower, 48,000 is lower. So sanction, the drawing power in this scenario will be 48,000 only. Understand? So everything is same as that of previous question, but just that in the given situation, amount you got is more than the sanction limit. You should remember every time that drawing power cannot exceed the sanctioned limit. Drawing power will always be less than or equal to sanctioned limit. Getting it? Yes. Next, question number 7. Agrim, a CA student, is part of engagement team conducting audit of Madurai branch of ARB Bank. CA Bhuvan, engagement partner, has asked him to verify provision made by the branch as on 31st March 2024 in respect of the following non-performing assets. So they have made certain provision and they are asking you to determine whether provision made is correct or not. Okay, we will see. First of all, AK Industries, its a classification is a doubtful one. So if it is classified as a doubtful one, how much should be the amount of provision? 25%, right? Doubtful, which is secured for secured portion 25%, unsecured portion 100%, right? So outstanding amount is 10 lakhs. In on 10 lakhs, if you calculate 25%, it becomes 2.5 lakh, but they have made provision of 5 lakhs, which is wrong. So you should suggest the management to reduce the provision from 5 lakhs to 2.5 lakhs. Next, Jupiter Traders substandard. Substandard means how much will be the rate of provision? 15%. So on 50 lakhs, 15%, how much it becomes? 7.5 lakhs. They also provided 7.5 lakhs. Correct provision they have provided. Next, VT and Co doubtful category 2. If it is in the state of doubtful category 2, how much will be the amount of provision? 40%, right? So 30 lakhs multiplied by 40%, how much it should be? 12 lakhs should be the provision, but they have provided 30 lakhs, which is wrong. Next, ASD and Sons loss. If it is loss, complete amount should be provided as provision, right? So 1 lakh should be provided as provision. They have provided 1 lakh. We'll once read this question here also, this one. The engagement partner has already verified NPA classification. Outstanding amounts as on 31st March 2024 relating to each NPA account listed above except ASD and Sons are fully secured. Okay, it seems all of the accounts are fully secured. However, only personal guarantee of a proprietor, net worth of a proprietor 50 lakhs is available in account of ASD and Sons. See, will you check the net worth of a proprietor? No. You will just check value of security. For classification of NPA and for provision of calculation of provision, you will not check how much net worth this borrower is having. Okay, you will just check value of security that he has offered. Getting it? He might be having crores of net worth, but the value of security has become zero. You will treat that loan amount as unsecured only until and unless he further offers more security. Got it? Yes. Comment on the correctness of above provisions. Agreement is in dilemma regarding classification of above accounts as NPA, although these are fully secured and are guaranteed. Guide him. So I have already told you, you have to write how much provision you have to make the category wise provisioning, and for the given situation how much provision it will come. So same as we have calculated, 5 lakhs, 7.5 lakhs, correct. Here 12 lakhs. So the same thing you need to write on. Got it? Yes, sir. Next, question number 8. National Bank has advanced cash credit facility of 25 lakhs to Sun Industries. Following is the extract of account of Sun Industries reflecting in CBS of bank from December 1st, 2023 to March 31st, 2024. So these are the transactions. On 1st December, there is a debit of 45,000. On 31st December, there is a credit of 1 lakh. And from 31st December onwards, after 31st December, there are no credits, only debits. Interest have been debited and there are no credits. Now, in a cash credit account, it will be treated as out of order in 3 situations. What are they? If amount outstanding is more than the sanctioned limit continuously for 90 days, or there are no credits in the account continuously for 90 days, or there are credits but the credits are not even sufficient to cover the interest that has been charged. In that situation also, the account will be treated as out of order, and once the account gets out of order, it will be treated as NPA. Now in this situation, can we say there are no credits for more than 90 days? Yes, almost from 31st from 1st January till 31st March, no credits. That means for 91 days, more than 90 days, there are no credits. So this will become out of order. This account becomes out of order and it has to be treated as NPA. Correct? Yes. Now, drawing power during the above period was consistent at 25 lakhs. Within the drawing power only it is there. Account was classified as a standard asset, it seems, as on 31st December 2023 in the books of bank. Okay, as on 31st December 2023, it is a standard asset only. The security charged with the bank remains intact throughout this period. Comment on asset classification of above account as on 31st March 2024 in the books of bank. As on 31st March 2024, this becomes out of order and it should be classified as NPA. Got it? You need to write down these three situations. An account should be treated as out of order in three situations: if outstanding balance remains continuously in excess of a sanction limit, or outstanding balance in principal operating account is less than sanction limit only, but there are no credits continuously for 90 days, or credits are there but not enough to cover the interest debited during the same period. If any of these situation is present, you will call that account as out of order, and once it is treated as out of order, it should be treated as NPA. So it should be classified as a substandard asset on 31st March. Next, question number 9. During the course of statutory audit of a nationalized bank, CA Amrish is performing audit procedures in relation to advances. He has verified the selected sample of borrower accounts representing advances and found nothing unusual. In the banking environment, there exists documentary evidence containing observations, comments on advances which can be useful to the statutory branch auditor in performing an effective audit. List out few such documentary evidence which can be made use by the CA Amresh. So if you see in case of bank, apart from statutory audit report, there will be various other documentary reports that will be available. So they are asking what will be other documentary reports that will be available. First of all, there will be internal audit report, there will be concurrent audit report. So by going through the internal audit report, by going through the concurrent audit report, statutory auditor can get to know whether any adverse remarks about any advances has been identified in the concurrent audit or internal audit. Similarly, there will be internal inspection report that would have been done by the bank officials. Similarly, there will be inspection report that would have been done by officials of RBI, right? That inspection report also you can see. And still there will be previous year's audit report, right? So previous year's audit report, latest internal inspection by bank officials, RBI's inspection report, concurrent or internal audit report, report on verification of security, any other internal reports that are specifically available, and manager's charge handing over report. What is manager charge handing over report? See, in case of banks, generally same manager will not be present for the single branch continuously. Managers will change at least once in every 3 years. So when existing manager is going out and a new manager is coming in, the outgoing manager will hand over all the assets of the branch, all the advances of the branch to the incoming manager. That handing over will be done in the form of a report. You will call that as charge handing over report. Got it? Yes, sir. Next, so these are various reports that will be available. Next, question number 10. Mahavir and Associates is appointed as a statutory auditor of KBC Bank for the financial year 23-24. During the audit, Miss Chandana, an article trainee, noticed that Siddharth Industries had an outstanding loan of 50 lakhs as on 31st March 2024. On March 29, 2024, company made a payment of 10 lakhs, reducing the outstanding loan balance to just 40 lakhs rupees. However, on April 4, 2024, Siddharth Industries initiated a reversal transaction of 8 lakhs, increasing the outstanding loan balance again back to 48 lakhs. So before 31st March, outstanding balance was 50 lakhs, and just before 31st March, they have initiated a credit of 10 lakhs, making the balance to 40 lakhs as on 31st March. Again, after 31st March, within 2 or 3 days, they have again reversed the transaction for 8 lakh rupees, again making the balance to 48 lakh rupees. So can you call this as account has been regularized near the balance sheet date? Yes. Now the payment and subsequent reversal occurred within short period, with the final outstanding balance remaining 48 lakhs after the reversal. Considering this scenario, what should be the response of Mahavir and associates to this matter, particularly regarding classification of borrower's account and the potential risk of it slipping it into NPA category? Now here, auditor, he needs to check this aspect from the point of view of whether this amount has been credited to this account with a view of turning this account to normal account, because if this amount has not been credited as on 31st March, it would have been NPA and provision has to be provided for that. Did bank people credited the amount just before the balance sheet date in order to avoid provisioning? Is that the reason? Auditor should check that, understanding. However, there could also be possibility that genuinely borrower might have paid the amount. Both the situations are possible, but the auditor has to check whether the reason is genuine or wantedly in order to avoid the account turning into NPA they have created. Those points only you have to write down. Got it? Yes. Next, question number 11. During the audit of Smile Bank, CSVT focused on understanding the risk management process of the bank. She reviewed how management developed controls and used performance indicators to monitor key business and financial risks. CSVT also assessed whether the risk management system effectively identified and mitigated risks in required areas. How should CSVT evaluate adequacy of bank's risk management controls? So, bank is having risk management system, risk management controls. How CSVT should evaluate that risk management system? This is simple. If you remember, in the fourth chapter in SA 315, there are 5 components of internal control system. The same 5 components you will be seeing here. First one is oversight and involvement in the control process by those charged with governance. Nothing but this is one of the element of control environment, right? Do you remember? Control environment is one of the component of internal control system. Next, identification, measurement and monitoring of risks. Nothing but management's risk assessment process, second component. Next, control activity, actual control activity, third component of internal control system. Next, monitoring activity, this was the fifth component. And reliable information system and communication, this was the fourth component. So all the 5 components which you have seen in SA 315 for internal control system, same points, understanding, there is nothing new. Next, question number 12. MNB Bank advanced certain loans guaranteed by government. State the prudential norms for asset classification and income recognition of such loans. See, with respect to government guaranteed loans, loan can be guaranteed by central government, loan can be guaranteed by state government, right? Now, central government guaranteed loans should not be treated as NPA even if the amount is outstanding for more than 90 days, until and unless the guarantee has been invoked and central government has repudiated the guarantee. Until and unless central government repudiates the guarantee, you should not treat that loan amount as the NPA. But for the purpose of income recognition, it will be treated as NPA only. Only for the purpose of provisioning requirement, central government guaranteed advance should not be treated as NPA. Got it? Yes. But that rule is not applicable to state government guaranteed advances. Even though the advance is guaranteed by state government, if the amount is outstanding for more than 90 days, it will be treated as NPA. Got it? Yes. But central government guaranteed advance will not be treated as NPA even if it is outstanding for more than 90 days. Same point you need to write down. Next, question number 13. K Limited is availing cash credit limit of 25 crores from Element Bank Limited. The drawing power of the company range between 22 crores and 25 crores. During the year 23-24, the limit availed by company remained less than 20 crore during all the days of the financial year 23-24, but the company has not deposited any amount in the cash credit account and there are no other credits to this account during the last 2 quarters. That means for 180 days there are no credits. Will this account become out of order? Yes, it becomes out of order. How will this account be classified in the books of accounts of LMN Bank? It will be classified as NPA. Same points, these points we have seen na? In order to treat an account as out of order, if any of these three situations are present, you will treat it as out of order, and once it becomes out of order, it will be classified as NPA, right? Yeah, so account should be treated as out of order. Next, question number 14. You are the auditor of Plus Bank Limited. The bank has made following provisions for the year ended 31st March. Okay, these are different types of provision that it has made. Now you are in the process of verifying provisions and contingencies of the bank. What audit approach and procedures will you adopt to verify the above? So for verification of provisions, what are the audit approach you will follow? First of all, you will check whether bank is complying with the rules and regulations prescribed by authorities for the purpose of calculating provision. In case of bank, RBI have issued various circulars with respect to the provisioning norms, whether those norms are complied or not, you will check that. And with respect to provisioning, the loan amounts, whether the advance accounts have they been correctly classified into standard, substandard, doubtful, loss account or not. This classification also you will see, because based on that classification only provisioning will be made, correct or not? Yes. Next, with respect to income tax provision, you will check, you will ask the company to give you computation sheet and you will check whether the provisions of Income Tax Act have been followed or not, and other provisions for expenses vis-a-vis circumstances warranting the provision. You will also examine various other provisions that have been created: tax provision, detailed breakup of standard loans, non-performing assets, and how bank is computing provision for standard assets and NPS, whether that norms 15%, 25%, 40% is that percentage followed or not, you will check. Got it? This is how you will verify provisions and contingencies. Next, question number 15. While conducting statutory audit of large bank of KNB Bank, large branch of KNB Bank for the year 23-24, CA Hema observed that profit and loss account of branch reflects interest income of 80 crores and other income of 5 crores. She also noticed that few borrower accounts at branch have slipped into NPA category in the past period as well as in the current year. Which audit procedure should be performed by her to verify reversal of income in the books of branch? So, auditor has to check whether the interest income that has been charged has been reversed with respect to the accounts that have turned into NPAs. That is the first point. So, if account becomes NPA, interest accrued, has it been reversed or not? And from the date of that NPA, they should cease to accrue the interest, and if at all any accrued interest, it should be reversed. And if at all any income has been recognized wrongly in the previous year, wrongly recognized income should also be reversed. Similarly, not only interest, any commission, fees on these NPAs which is not received should also be reversed. Understanding? And if there are any large debit balances in the interest income account, see, interest income account should have credit balance. If auditor finds any large debit balance in the interest income account, you need to detailedly verify them, pointing out differences in interest charge. Got it? Yes. So this is how you will verify reversal of interest. Next, question number 16. CBC Bank Limited has multiple loan accounts classified as NPAs. During the financial year, some borrowers made partial payments towards their outstanding dues. So, with respect to outstanding dues, the amount which has become NPAs, borrowers has paid partial amounts, complete amount they have not paid. However, there was no explicit agreement between the bank and the borrower regarding the appropriation of these recoveries. Now, if complete amount has been recovered means you will charge it completely to interest and the principal portion. Only partial amount recovered means whether this partial amount should it be charged to interest portion or principal portion, you will get a confusion, right? So the same confusion they are also these people also got, that is whether they should be adjusted against principal or interest, the partial recovery amount. The bank's finance team decided to recognize the recovered amount as interest income in its financial statements. Generally, for this situation, you have to check accounting policy being followed by the bank, and you should also go through the requirement of accounting standard 9 revenue recognition. Understanding, based on accounting standard 9 and the accounting policy followed by the bank, you have to treat the partial recoveries accordingly. Mostly 99% of cases, partial recoveries will be first of all adjusted towards interest, and the remaining amount will be adjusted towards the principal portion. Got it? Yes. However, during the statutory audit, auditors raised concerns about the treatment of these recoveries, discuss the appropriate accounting treatment of partial recoveries and NPAs, also explain the principles that banks should follow in recognizing interest income from NPA. So, you need to check the accounting policy that is being adopted by the bank, and you should also verify income recognition as per AS9, what AS9 is saying. And interest partial or fully realized in NPAs can be taken to income. However, it should be ensured that credits towards interest in the relevant accounts are not out of fresh or additional credit facilities. So, if the borrower has repaid the amount, that repayment should be from genuine income sources of borrower. It should not be that bank has given a fresh loan to the borrower to repay his old loan. Such a situation should not happen. Understanding? Yeah. Next, question number 17. See, in question number 17, all this till here it is irrelevant. Just this last two lines, by reading the last two lines of the question, you can give the answer. Let us see. In carrying out audit of advances as part of statutory audit of branch, a statutory auditor would obtain evidence about certain matters, state those matters. So, while doing audit of advances, you will obtain evidence with respect to what aspects of advances? Tell me. Nothing but there will be certain assertions to the assets, correct or not? Is the advance given by the bank, is it a asset to the bank? Yes. So what are the assertions? Five assertions for the assets: valuation assertion, existence assertion, right, rights and obligation assertion, cutoff assertion, presentation and disclosure assertion. So you will obtain audit evidence with respect to these five assertions. The same thing you will write. See, amounts included in balance sheet in respect of advances which are outstanding at the date of balance sheet, nothing but cut-off assertion. Advance represent amount due to the bank, nothing but rights and obligation assertion. Amounts due to bank appropriately supported by loan documents, proper documentation is there or not, you will see. There are no unrecorded advances, that means completeness assertion. Next, stated basis of valuation of advance is appropriate, nothing but valuation assertion. Next, advances are disclosed, classified and described in accordance with the recognized accounting policies and practices, nothing but presentation and disclosure assertion. Next, appropriate provisions towards advances have been made as per RBI norms accounting standards and generally accepted accounting practices. Nothing but again valuation assertion, right? Yes, sir. So you'll obtain audit evidence with respect to all these assertions. Next, question number 18. Messrs. JKL and Associate Chartered Accountants or statutory auditors of Messrs. IBS Bank Limited for the financial year 24-25. During the audit, they observed the following items included under interest income in the financial statements of the bank. Let's see. An amount of 5 lakh relating to short-term crop loan where the installment was overdue for one crop season. Now, can this amount of 5 lakh interest, can it be recognized as income? Yes, it can be recognized because the account is outstanding only for one crop season. See, this is a short-term crop loan. In case of a short-term crop loan, account should be treated as NPA if it is outstanding for more than two crop seasons. Here it is outstanding only for one crop season, so it is not a NPA. So 5 lakh interest can be recognized. So you can recognize 5 lakh interest on this account. Next, an amount of 7 lakh relating to advance guaranteed equally by Government of India and Government of Tamil Nadu, where installment has been overdue for more than 6 months. Now, this account is guaranteed by state government, central government. 3.5 lakh is guaranteed by state government, 3.5 lakh is guaranteed by central government. Now, this has become NPA for the purpose of income recognition. This is NPA. Complete 7 lakhs you should not recognize as interest. Understanding? But for the purpose of provisioning, only 3.5 lakh which is guaranteed by state government should be treated as NPA. 3.5 lakh guaranteed by central government should not be treated as NPA. Why? For the purpose of provisioning. But for the purpose of income recognition, both should be treated as NPA only, and you should not recognize the complete 7 lakhs. Got it? Yes. Now, what is the question they are asking? From the above facts and details, what should be the correct treatment of above interest? See, 5 lakh can be recognized as income and 7 lakh should not be recognized as income in the bank's financial statements. State the amount that can be recognized as interest income. You can recognize 5 lakhs as interest income with appropriate reasoning. Also determine the amount to be classified as NPA. You need to classify 3.5 lakh as NPA with reference to applicable norms. So 3.5 lakh should be classified as NPA. 5 lakh should be recognized as interest income. Got it? Yes, sir. Got it, sir. Next. Question number 19. XYZ Developers, a property development firm, has secured a short-term construction loan from ABC Bank to finance a residential project. Upon completion of the project, XYZ Developers plan to refinance this loan with a long-term takeout loan from DAF Financial Institution. However, due to delays in project's completion, XYZ Developers face difficulties in repaying the loan and the bank classifies the loan as non-performing asset. What is the meaning and primary objective of takeout finance in the property development? See, what is meant by takeout finance? Takeout finance means nothing but, first of all, you have taken loan from one particular bank. Now you are feeling that rate of interest charged by this bank is very high or charges are very high, whatever the reason might be, you wanted to shift this loan from this bank to another bank. Then what you will do? You will go to another bank and you will ask this another bank to take out this earlier loan which you have taken, right? So what this new bank will do, let's say this new bank is HDFC Bank. This HDFC Bank will pay amount to SBI Bank, which is your first loan, and it will take that advance amount. Now you have to repay amount to HDFC Bank. This is known as takeout finance. HDFC has taken out the loan from SBI Bank. Got it? Yes. Now that is takeout finance, which you will explain. The objective is many reasons. to expand sources of finance, address sectorial or group entity exposure, long tenor debt finance. Various reasons can be there for the purpose of takeout finance. And they're also asking, how does the classification of loan as NPA impact income recognition by lending bank? Lending bank means the first bank. Now, the first bank should treat the account as NPA only until and unless the amount is received either from the borrower or from the takeout bank. Until and unless HDFC pays the amount to HDFC to SBI bank, or the borrower pays the amount to SBI bank, it should be treated as NPA only. Got it? Yes. So the same thing you need to write down. Next, question number 20. While verifying provision of advances of a branch of HFC bank as part of statutory branch audit, CA Mini notices that credit facilities consisting of term loan to JT Mills have been classified under doubtful D2 category. The outstanding balance in the above term loan account as on 31st March is 150 lakhs. Of these 150 lakhs, value of security held in account is 100 lakh. That means secured portion is 100 lakhs, unsecured portion is 50 lakhs, and it is in the category of D2. So if it is in D2, for unsecured portion, complete 50 lakhs should be provided as provision. Correct or not? Complete 50 lakhs should be provided as provision. And for secured portion, only 40% will be provided as provision. So 40 lakhs will be provided as provision. So total provision that you have to make is 90 lakhs. Got it? Yes, sir. But the branch has made a provision of 75 lakhs only. Is the provision made by branch proper? The answer is no. You have to make a provision of 90 lakhs. Next, question number 21. Column A describes description of certain terms used in banking industry. Complete column B by suggesting term. So they have given certain definitions. You need to identify what those definitions are. See, first definition: audit of borrower client of bank carried out at bank's request to verify borrower's current assets. Nothing but stock audit. Correct or not? Borrower, when he takes working capital loan, he will give stock as a security. That stock is nothing but a current asset. Now bank has appointed a particular chartered accountant to verify that stock of the borrower, nothing but you will call it as stock audit. Next, limit up to which entity can withdraw from the sanctioned working capital limit, nothing but drawing power, right? Yes. Statutory right of creditor to adjust debit balance in debtor's account against any credit balance lying in another account of debtor, nothing but set off, right? Yes. Creation of security in a bank branch by mere delivery of title deeds by a prospective borrower, nothing but mortgage. Since it is mere delivery of title deeds, you can call it as equitable mortgage. If registration has also been done, you will call it as registered mortgage. Correct? Yes, sir. Next, question number 22. You are statutory auditor of ABC Bank Limited, a scheduled commercial bank having 350 branches across India. During the audit for the year ended 31st March 2025, you observe the following. Operating expenses have increased by 28% compared to the previous year. It seems operational expenditure has increased a lot, but income has increased only by 10%. Significant increase in noted in staff welfare expenses. Certain branch managers have discretionary power to incur expenses. That means there is no proper control here. Branch managers, they can spend how much amount they wanted, it seems, for the purpose of certain expenditures without taking any authorization. Next, bank has recently migrated to centralized expense processing system. Internal audit reports indicate delays in submission of supporting documents in few regional offices. As a statutory auditor, explain the audit procedures you would perform in respect of operating expenses. See, with respect to operating expenses, you will first of all check what are the internal controls that have been established in the bank in the area of operating expenses. So study and evaluate system of internal control. So if you see in the present situation, branch managers are having discretionary power. So how much amount they wanted, they can incur, it seems. Instead of that, there should be authorization control. You need to suggest that. Understanding? Yes. So the same suggestion you will have it here. Next, should examine whether there are any divergent trends in respect of major items. So if you observe in the present situation, staff welfare expenses has drastically increased, it seems, and also some other operating expenses have also increased drastically. Those 2 points you need to refer there. And you need to perform substantive analytical procedures. You know how to perform substantive analytical procedure, we have discussed in essay 520. And verify certain expenses with reference to supporting documents. Got it? Yes, sir. Next, question number 23. N Limited, a manufacturing company, has availed a cash credit facility of 1 crore from XY Bank Limited. As per the latest stock statements submitted for the quarter ended 31st March 2025, the drawing power is 80 lakhs. The outstanding balance in the cash credit account as on the balance sheet date is 75 lakhs only. Okay, drawing power is 80 lakhs, outstanding is 75 lakhs, within the limit only. During the last 2 quarters, bank has debited interest amounting to 7 lakhs to the account. However, the total credits deposited by the company in the same period are only 5 lakhs. So amount credited to cash credit account is not sufficient to cover even the interest amount also. So this account should be treated as out of order, right? The account has otherwise remained within sanction limit and drawing power throughout the period. Even though it is within the drawing power and sanction limit, if the credits are not sufficient to cover the interest amount or the debits that have been charged for a continuous period of 90 days, you will treat that account as out of order, right? The statutory auditor, while reviewing the loan account, is required to classify the asset as per the prudential norms. As an auditor, how will you report or classify this account? Give reasons with reference to applicable norms. So same, this question we have already seen 2 times previously, right? Same 3 points, and you need to conclude by calculating that sanction limit is 1 crore, drawing power is 80 lakhs, outstanding balance is 75 lakhs within the drawing power only, but interest debited is 7 lakhs, credits during the period is only 5 lakh, and that 5 lakh is not sufficient to cover the interest portion also, so it will be treated as out of order, and consequently account should be classified as NPA. Got it? Yes, sir. This is how you need to explain. Next, question number 24. During the audit of C2 Bank Limited, the auditor reviews the loan portfolio and comes across the account of Messrs. Neemtree Infrastructure Limited, which has an outstanding balance of 10 crores. The latest valuation report by an RBI approved valuer indicates that, see, outstanding balance is 10 crore. Okay. The latest valuation report by RBI approved valuer indicates that realizable value of security available against this loan is 80 lakhs. So latest security value is 80 lakhs. Now, okay, we'll further read. The value of same security during previous RBI inspection was 6 crores. Previous value of security is 6 crore, right? Now, here erosion in the value of security has happened. With respect to erosion, there are two rules. First, if value of security has fallen below 50% of previous value assessed by the uh, you know this RBI inspection team, if the value of security falls below 50% of previous value, you need to treat that account as doubtful. Directly doubtful. Next rule, if value of security falls below 10% of outstanding amount, you need to observe this. In the first situation out, I told you below 50% of previous value of security, understanding. Here in the second situation, below 10% of outstanding loan amount, understanding. In such a situation, you need to directly classify this as loss, loss account. Now here in this situation, if you see, latest value of security is 80 lakhs, correct? Now 10% of outstanding amount is 1 crore. Can you say value of security fallen below 1 crore? Yes, it has fallen below 1 crore rupees. So should it be treated as loss account? Yes, loss account. So the correct answer is this. But in the answer, what they have given is, they have taken this one. This one they have taken. The previous value of security is 6 crores, correct? Now 50% of 6 crore is 3 crore. Now the new value 80 lakhs, is it below 3 crore? Yes. Since it is below 3 crore, they have classified it as doubtful. But which is more severe? Doubtful is more severe or loss is more severe? Loss account is more severe. In the present scenario, it can be treated as loss asset also, based on this point, correct? So you should write answer as loss asset, understanding. But in the answer, they have given it as doubtful. It might be due to some mistake, they have given it like that. But you have to write this particular provision and treat it as loss asset. Got it? Yes, sir. Next, additionally, in another borrower account, Mrs. Gayatri Textile Private Limited with an outstanding balance of 5 crore. So in another account, outstanding is 5 crore. The realizable value of security is estimated to be 40 lakhs. Value of security is just 40 lakhs. Now 10% of 5 crores, it becomes 50 lakhs, right? Now is 40 lakhs less than 50 lakhs? Yes. So you have to treat this as losses. Got it? Yes, sir. Yeah. Same thing you will explain here. Next, question number 25. MNB Bank Limited is undergoing its statutory branch audit. During planning stage, engagement partner convened a meeting with audit team and valuation expert contracted by the firm. The team discussed several matters, including the likelihood of specific errors, instances of misstatements found in the previous year, and possible ways in which frauds could be perpetrated by the bank personnel. The partner also emphasized the importance of professional skepticism and identifying any conditions indicating potential misstatements. Explain the purpose of such a engagement team discussion. What is the purpose of engagement team discussion? Same points which they have told in the question, for discussing likelihood of specific errors, for discussing instances of misstatements found in the previous year, and also discussing possible ways of fraud that can happen, and discussing importance of a professional skepticism. All these are the purposes for which this engagement discussion will happen. Same points you will write. So see, same points you will get here. If you see, the engagement team discussion already ordinarily includes following discussions, same points. So question itself is having the answer. Next, list any 3 matters that are ordinarily included in engagement team discussion. Also state 2 advantages of holding such a discussion. So what are the advantages of holding discussion? You can have specific emphasis on any items in the financial statements where the probability of a misstatement can occur. You can have specific focus there, and it further enables audit engagement partner to delegate the work. And you can also, the audit engagement partner may review the need to involve any specialists or experts. So all these are advantages of engagement team discussions. Got it? So these are question and answers of chapter number 12. Now let me open next chapter. Now we'll see question and answers of chapter number 13, which is audit in an automated environment. If you see this particular concept in your ICI study material, you will find it as part of third chapter. That risk assessment chapter is there, not 330. As part of that chapter, this content has been given in your ICI study material. But from this content, every attempt, for sure you will get 4 marks. There will be just 6 to 7 pages of content which is related to this information technology in that chapter. From that 6 to 7 pages, every attempt for sure he will give 4 marks. Many students, they are leaving that particular content for choice. So in order to avoid that, I have given this particular concept as a separate chapter so that you will not miss this particular concept. Got it? Yes. Now we'll see the question and answers from this particular chapter. Question number 1. Companies are increasingly using data analytics for managing their operations. Auditors can also obtain good results by using data analytics. What are the tools and techniques used by auditors in applying the principle of data analytics, in which and in which areas data analytics can be used by the auditors? If you observe, there are two questions here. First of all, they are asking the tools and techniques used by auditor for the purpose of data analytics is known as computer assisted audit techniques, CATs. So that is the first answer that you need to write down. Next, in which areas this data analytics tools will be used by the auditor? In lot of areas, data analytics tools will be used by the auditor. Some of the areas are as follows. In order to check whether data that the client has given, is that data complete or not? So checking completeness of the data given, for that purpose auditor can use CATs. Similarly, during the audit you will take sample, right? So for taking sample also you can use these tools. There are various sampling methods, right? Interval sampling, stratified random sampling. Now you need not manually apply these methods. You can just give the data to the system and tell the system which method to apply. By applying that method, it will only select the sample. So for selection of audit samples also, this particular data analytics tools will be useful. Next, for the purpose of recomputation, recalculation, this data analytics tools will be used. So recomputation, re-performance of mathematical calculation, for those purposes also these CATs will be used. Similarly, for analyzing journal entries, you can use these computer assisted audit techniques for analyzing the journal entries. So analysis of journal entries and also evaluating impact of control deficiencies. In all these areas you can use computer assisted audit techniques. These are just some of the example areas. Apart from this, in lot of other areas also you can use computer assisted audit techniques. Next, question number 2. You are appointed as auditor of a company manufacturing paints. The company has a robust system of internal control. Most of the controls in the company are automated and they are working effectively. However, in certain situations, manual elements in internal controls are more suitable. What are the circumstances where manual elements in internal control may be suitable? See, control can be either automated or you can also implement the control manually. Now, in which situations manual controls are more suitable? That is the question that they are asking. There are a lot of situations. If there are unusual transactions, large number of unusual transactions, that means you cannot predict the type of transaction. If you cannot predict the type of transaction, if that transaction is unusual, how can you design a automated control? Not possible. So in case of large unusual non-recurring transactions, better to go for manual controls. Similarly, if it is very difficult to define the error. So errors are difficult to define, anticipate or predict. So you don't know which type of error will occur. If you don't know, if you cannot define the type of error, how can you create automated control? How can you design a control to identify that error if you are not able to define the error itself? Understanding, in such a situation also it is better to use manual controls. Understanding. Next, the circumstances are changing continuously. Since the circumstances changes continuously and you have designed a automated control, and that automated control is not able to identify the mistakes or the errors in the changed circumstances, and that circumstances are changing continuously. Understanding, you have designed a automated control for identifying errors and frauds. Now the circumstances are changing continuously. Because of change of circumstances, the type of errors and the type of frauds are changing. So it is not possible for the automated control to detect those errors and frauds because of continuously changing circumstances. In such a situation also better to use manual controls. Next, after implementing automated control, that automated control, whether it is working properly or not, that needs to be reviewed continuously. Correct or not? So for reviewing whether automated control is working properly or not, it is not possible to again design a automated control. You have to manually only review. Understanding. So in monitoring the effectiveness of automated controls also, you better use a manual control. Understanding. Yes. Next, question number 3. Z and Associates are the auditors of Realton Limited, an export oriented unit which specializes in manufacturing oil extraction plants. Since many complex processes are involved, they are digitizing their operations. They are restructuring their business models, which are driven by technology. Since most of the operations of the company are automated, Z and Associates are planning to do digital audit. Explain the use of digital technology in the conduct of an audit. See, you have to write that first point will be, since organizations are continuously depending on technology, most of the organizations are digitizing. So automation is key to digitization. About the entities, about the clients you will mention. After that, in such a business environment where company itself is using automated technology, use of digital technology is being made by auditor also, right from planning to expression of final opinion. Auditors are making use of artificial intelligence, data analytics and other technologies. By using such tools, auditor can conduct audit in a better way and devote more attention to areas requiring greater focus. That is the last point is the advantage that you will get because of use of tools while doing the audit. Getting it? Yes. Next, question number 4. In an automated environment, general IT controls are policies and procedures that relate to many applications and support the effective functioning of application controls. Yes, that is true. It includes access security as well as program change. Controls over access security and controls over program change or general IT controls. Access security means what? Controls that prevent access to data, controls that prevent access to operating system, controls that prevent access to assets. Any control that will prevent the access to particular item is known as access security. Understanding. Program change means you cannot easily make changes to the existing program. The controls that will not allow easy change to the existing program is known as a program change controls. Now this program change controls will ensure that even after changing the program, the reporting objectives are achieved. Understanding, these things you have to explain in the answer. So now what they are asking, what are the objectives and activities included in access security? So under access security, what are the activities that will be included? security of organization and management, policies and procedures related to security. Sorry, there was a power cut. So next you have application security, data security, operating system security, right? So data security, operating system security, network security, physical security. So access security with respect to all these aspects you will have. Next, program change. Under program change, the objective is, the objective of program change control is to ensure that even after the system has been modified, even after the program has been changed, the reporting objectives will be achieved, that modified systems continue to meet the financial reporting objectives. That is the purpose of program change controls, and it includes activities such as change management process, recording, managing and tracking change requests. Change request means whatever the request has been received for changing the program, recording those requests, managing those requests and tracking those requests, making and testing changes, all these aspects. Next, question number 5. While it is true that companies can benefit immensely from the use of data analysis in terms of increased profitability, better customer service, etc., analyze various functions that an auditor can perform using data analytics. This is nothing but the first question only. By using data analytics, you can perform various things like analysis of journal entries, selection of sample, checking whether the data given is complete or not, re-performance, recalculation, right? So all those things you will get again, all the points that we have seen in the first question. And you need to explain what is meant by data analytics, the tools and techniques used by the auditor for the purpose of data analysis. They are known as computer assisted audit techniques, CATs. These 2 points you need to write down and explain the purposes why the data analytics can be used by the auditor. That's it. Next, question number 6. In an automated environment, there are generally 4 types of audit tests available. Tell me, what are the 4 types of tests available in an automated environment? 4 tests: inquiry, observation, inspection, re-performance. These are the 4 tests that are available or that you will generally use in case of automated environment. You have to explain all these 4 tests in this question. As a senior auditor, it's crucial to guide your team in selecting the appropriate audit tests based on the situation. Explain the type of audit tests commonly used in an automated setting. So what are the audit tests that will be commonly used? The 4 audit tests I told you, no? Inquiry, inspection, observation, re-performance. You have to write the definitions of all these 4 procedures. After that, they are also asking, provide insights on how to determine when and which tests to apply, emphasizing the role of professional judgment in making these decisions. So which test has to be performed in which situation, that depends on various aspects. First of all, it is a matter of a professional judgment. Auditor, based on the surrounding circumstances, he needs to decide whether he has to use inquiry alone or he has to use observation, inspection, re-performance. Based on his professional judgment, he needs to decide. Along with his professional judgment, there are various other aspects also that will impact. So first of all, professional judgment and various several factors like risk assessment, control environment, desired level of evidence required. All these aspects will also determine which type of a procedure has to be used. Got it? So the 4 tests that are available in an automated environment are inquiry, re-performance, observation, inspection. Got it? Yes, sir. Next, question number 7. Mention the types of control in an automated environment. So what are the controls that are there in an automated environment? 3 types of controls. First one is general IT control. General IT controls means controls that are operating for entire system is known as general IT control. Next, application control. Application control operates at application level, single application, single software level is known as application control. Next, IT dependent control. IT dependent control involves both manual element as well as automated element, that is known as IT dependent control. Okay, so to remember easily, general IT control means for your mobile phone you will be having a screen lock. That screen lock which you have for your mobile phone is a general IT control, because that screen lock will protect your complete mobile phone. All the applications that are there in this mobile phone will be protected. So that screen lock which you have for your mobile phone is a general IT control. And for each application in the mobile, you can keep a particular password. That password which you keep for each and every application, that is known as application control, which protects each and every application. Understanding? Yes. Now identify the type of control in the following table in column B against column A, which contains areas where controls are to be implemented in an automated control. So they're asking access security, whether access security is a general IT control or application control. Access security generally operates at a complete system level. User ID and password to log in into the system is a access control, which is a general IT control. Understanding? So this is a general IT control. Next, sequence number checks. Sequence number checks will be there in the application. Like for example, if you take Tally, when you enter journal entries, each and every journal entry automatically a particular number will be allotted in a sequential manner. That is known as sequential number check, which is operating in the application. So this is a application control. Next, data center and network operations. So controls over data center and network operations are general IT controls, because they protect the complete data center. Getting it? So this is general IT control. Next, mandatory data fields, they will be there at the application level. Like when you wanted to enter any data, there will be certain red color star mark. If there is a red color star mark, it means that that is mandatory. Without entering that input or that information, you cannot submit the form. Now that control is operating at that particular application level, so you will call it as application control. Got it? Yes. So the three types of controls: general IT, application, and IT dependent control. And the following are general IT, application, general IT, application. Yes. Next, question number 8. CA Raj has just concluded the audit of company and noted certain findings, exceptions in the IT environment and controls, which need to be assessed and reported accordingly. Specify what points shall the auditor consider in assessing and reporting of audit findings in IT environment and IT controls. So when assessing the deficiencies and reporting those deficiencies, what points you will consider? First of all, you will check whether there is any weakness in the IT control. If there is any weakness in the IT control, what impact it will have on the overall audit? So impact of the weakness. After that, reporting that weakness to management. So reporting the deficiencies in that reporting about the deficiencies or reporting about the weaknesses to management. After that, reporting the deficiencies again to those charged with governance also. Got it? Yes. So these are the points that you will consider while reporting about the audit findings in the IT environment with respect to control deficiency or control weakness. Next, moving to question number 9. Given below is a table containing column A, column B. Column A contains a description of certain controls in an automated environment. Complete column B by stating appropriate type of control. Okay. Reasonableness check. So reasonableness check, what type of control it is? Is it general IT control or application control? First of all, what is reasonableness check? reasonableness check means nothing but, for example, if the input that you have to give is phone number, then in India, what are the number of digits that will be there in the phone number? It will be 10 digits. So if input should contain only 10 digits. If more than 10 digits have been given by the user, that input should not be accepted, because that is not a reasonable phone number. Understanding, that is known as reasonableness check. So any input that is not reasonable should not be accepted. That is a reasonableness check. Now, this reasonableness check, is it operating at entire system level or just that particular application level? At application level, these reasonable checks will be there. So this will be application control. Next, control over data center and network operation. This we have already seen in the earlier question also. This is a general IT control. Next, control over application system acquisition, development and maintenance. So controls over acquisition of complete system and maintenance of complete system. So they are not speaking about a specific software or application, about complete system. So controls operating over that complete system will be general IT controls. Next, program change controls. This program change controls, it is also general IT control. Got it? Yes. So application control, general IT control, general IT control, general IT control. That is question number 9. By this we have completed question and answers of this particular 13th chapter also.